2021's high probability income generator. Again, my name is Don Kaufman, and you're watching a TheoTrade presentation. It's a risk disclosure. We're not financial advisors nor a broker dealer. And I always put this up here simply because I did spend part of my career in the professional trading arena, then part of my career in the brokerage world, both at Thinkorswim, TD Ameritrade, which I'll discuss here momentarily. This is why you're here today. And I think that that's one of the most critical things. So we're going to talk a little bit about Ultima trades and why they're so ideal for the current market environment. So we're here also to learn how to generate, monthly income. We're going to really go in depth discussions about, of course, really the, again, creating trades for monthly income. All right. Next on the docket, we're actually going to learn a trading symbol professionals use on a daily basis to create ultimate trades. In fact, I'm going to cover that almost immediately right up front. You're going to learn how, and more appropriately, where you're going to find edge as a retail trader. There's one term that I'll use here pretty extensively today, and I want you to be familiar with it. Retail trader. You're retail, I'm retail. We're not an institutional, we're not market makers here. We're retail. And what works for retail can be a vast departure from what professional and market makers are doing. Very few people are even aware. Do you know that most market makers have to trade what they term market neutral? It's actually part of the Dodd-Frank bill. Specifically, if you want to look at it, it's called the Volcker rule. Next, you're going to learn, and again, reaping the benefits of high probability trades while learning little known secrets of not taking large losses. So we're going to talk about high probability positions and mitigating exposure on the back end, and what products are going to make the most viable candidates and what products are a recipe for disaster. So this sounds pretty simplistic. We're going to go through a huge amount, though, in the next hour and a half or so. With that, there is an indicator that I use extensively here. It's called the auto expected move indicator. This is our free gift to you today for staying in attendance right up until the end. So the auto expected move indicator is something I just use, again, constantly, day in, day out. If you've watched any of the videos here from TheoTrade, we constantly are discussing the auto expected move indicator. And it's literally one of the most comprehensive indicators ever written, in terms of a scripting language. And it's yours. And it is a $500 value. We provide this because, again, I use it constantly, and I'm even going to reference it throughout the course of today's session. Here it is. And by the way, the other aspect I want to tell you about today's session. Listen, I like doing these sessions live. Some people are like, oh yeah, I couldn't catch it, and it's during the trading day and I'm here trading. No, like, listen, I like doing this live. It's much more dynamic. There's trade setups, and I may even elect to execute some trades. But one of the cool things is when I say it's more dynamic, like, you can look at the indicator with me live. Now, this happens to be the Thinkorswim trading application. It's not the only trading application I use. I also extensively use Tastyworks. In fact, I'm lining up now to use Tastyworks even more than Thinkorswim, which I may discuss a little bit later in today's session. Nevertheless, the indicator that I'm referencing here, and this indicator, stay with me right into the end of the webcast today, and I will provide you the link to the indicator. The reason being, as I said, I use it constantly. I mean, incessantly. And if you take a look at something like Tesla, this is a screenshot. This is a screenshot of Tesla, and you think of Tesla as like this wild child. What you're looking at in terms of this indicator, these three lines, and let's just cut to the chase. What are the three lines on the screen? It's what the option marketplace depicts forward risk to be. So an option marketplace says, here's the price of options a week from now. Here's the price of options 2 weeks from now, 3 weeks from now. What's actually displayed on your screen is an indicator that literally, takes the option price and projects forward for the week. You have to realize it's not like an indicator like a MACD or a Fibonacci that's using back data. It's taking forward data. It's an option expiration that's like for this Friday, and it's projecting, hey, based on what the option market says, we should move here or here or here and here. Look at the symmetry of this. It's incredible. I mean, the marketplace literally comes up here, it stops, comes up here, it stops, comes up here, slide outside. But you look at this wild child like Tesla, and yet the wild child like Tesla seems to adhere to this expected move, okay, constantly. And it actually, there's so many different uses for this particular indicator. Again, I cannot stress enough. Stay with me right to the end of the webcast. We want to provide this to you. Other firms are going to charge you $500-$600, and the indicator wouldn't even come close to what we've built here. We wanted to provide it to clientele, of course, of TheoTrade. With that, a few housekeeping items. Listen, what I'm going to go into today, if you haven't picked up on this yet, I go through a lot, right? This is going to be a skill set. You're going to have to focus a little bit. Pay attention is what I'm saying. Shut the door, turn off Skype, chat, whatever else is distracting you. Close Facebook forever. Definitely get rid of a little bit of Twitter. Kick the kids out, definitely kick the kids out. Grandkids, get rid of them. The dog can always stay. Listen, all I say, you took the time to be here. I'm going to tell you what I'm going to give you today is worthwhile. Focus on being here. There's a lot of education packed into the next hour and a half. Here's a little bit about me. Listen, there are some newer people here. Is anybody here brand new, has no idea what a Don Kaufman is? If this is like the first time that you've ever been to a session here of TheoTrade, let us know. Just put a Y for yes. Okay, that's fine. Just like, is anybody here brand new? Come on, people, admitting it's the first step today. That was my awkward pause for caffeine. So here's the I guess the nickel tour. So people always say, well, what do you do here? So my background, and I always start with this. I watched order flow for 15 years. And most people have no idea what that even means, but I like throwing it out that way. I watched order flow for 15 years, and that's in large part what brought me to you. So my background is trading. Like, I don't know anything, other than that. I didn't go to school for like business or anything like that, but I grew up around traders. I had family that traded in Chicago all the way back into the 1970s, literally before I was even born. And I grew up around it. And my uncle started a big trading firm in the 1970s. And it always interested me because, you're sitting around like, the dining room table over like Thanksgiving with your family. And they're talking about, calls and puts. And again, I was always interested. So my uncle sold his trading firm in the 1990s. It was a multi-billion-dollar deal. If you're from the Chicago area, the firm was called O'Connor and Associates. He owned over 500 seats. They literally owned over 500 seats on exchanges worldwide. To this day, it's still hailed as one of the most successful derivatives firms ever. And that's kind of what I grew up in. So late 90s, I got out of college. 3 weeks out of college, I got a phone call, ended up in Chicago. And about 2 years after that, I was invited to a startup brokerage firm called Thinkorswim. We didn't even know what Thinkorswim was at the time, like, meaning that it was built, but we didn't even know it was going to be a brokerage firm. It was Thinkorswim. What's it going to be? It's going to be a trading platform. But is it for market makers? We didn't even know. And as the firm started to materialize a little bit, they said, hey, you're young. I was 24 years old at the time. To go out. You're going to run the education division. I go, sweet. I guess so. So I spent 2 years the market making side of the business. Then I went to work for Thinkorswim. I was on the executive team. We took the company public in 2007. I was then on the executive team of TD Ameritrade and went on to actually run education for TD Ameritrade and their 7 million clients. And all the meantime, I got to watch order flow. And what flow basically is I got to see everything that went through in terms of order flow, stocks, options, futures, currency trades, everything. I had access to it all, and we'd actually study it. There's only maybe 4 or 5 people in the entire world that have actually been in the education side of this business that have actually studied order flow. And studying order flow, okay, I mean, it's probably the single biggest attribute of that career at both Thinkorswim and TD Ameritrade, because we had the single largest options order flow in the entire US markets. We studied it. We know exactly what works, what doesn't, and some of that is going to be presented today. I mean, literally, we watched billions in others' mistakes, but more importantly, we watched retail clients. So we know what works for retail clients and what doesn't. And I say we, TheoTrade here, this is not like a one-trick pony. This is not just me. We have 7 other full-time instructors, most of which actually came with me from Thinkorswim and TD Ameritrade. By the way, if you ever need to get a hold of me after today, just Don Kaufman, and I'm just support@theotrade.com. We use a general inbox, but you just put my name in the subject, it'll come right to me. And I can tell you right now, I answer emails, 3-4 hours a day of emails. That's, it's the lifeblood of what we do. We're here to be able to answer emails for you. This is a couple of appearances, TD Ameritrade TV. This is actually the last time I was in Chicago. It's crazy. I mean, COVID's been crazy because I go to Chicago. I've been going to Chicago my entire life. And spent a huge amount of time there, and it's been since 2019. This is one of the last appearances I did on CNBC, myself pitted against, of course, Kevin O'Leary. Let's get down to business. What are Ultima trades? So let's discuss what Ultima trades is. One of the first things that I like to mention to people, Ultima does not mean ultimate. It's a misnomer. Ultima has nothing to do with that. So what Ultima basically is, if you look at like volatility, for those of you that speak geek, right? There's volatility and then there's Vega. Okay, what's after Vega? There's Vama. So what's Vama? Vama, okay, is the speed at which Vega moves, and then there's Ultima. So if somebody said like, Don, how do you make money in this business right now? I would tell you, I would say Ultima. And you go, you're an ultimate? And no, that's not what it means. Okay. And I'm going to explain exactly what it means. So higher volatility has resulted in significantly more options premium. No, I know I said options. That's the second time I've said options. I'm scaring you. Hold on. Okay. Options. There's significantly more options premium with higher volatility. Higher volatility, higher option premium. Now, most of you are probably familiar with something called the VIX. Let's go to the VIX. Ooh, look at this. The market's heating up to the upside over here. Let's go to the VIX. What is the VIX? The S&P 500 Volatility Index. What has changed in the VIX? I'll tell you what's changed in the VIX, COVID. Okay, so if you look where the VIX is right now, and again, I'm just going to put my mouse on where the VIX is right now. You see the line across my screen? Even in like an 18 or 19 vol, do you realize 18 or 19 vol, that's still higher volatility than we have seen in the previous 5 years. Like this would be the top end of volatility. So even though volatility right now is low in perspective to the last 18 months, it's still really high in perspective to the last previous 5 years. In fact, you can even pull up like 15 years in here. You pull up 15 years and like, look, volatility, it's a rocking right now, okay? But the VIX is kind of like, I'll say this nicely, it's my predecessor's indicator, right? Its option implied volatility skew is also at historically high levels. And the volatility of the volatility remains at incredibly high levels. Does anybody here know what the volatility of the volatility is? Okay, what's the symbol for that? What's the symbol of volatility of the volatility? Oh, VVIX. So VVIX, look at VVIX. You go, I don't even know what that is. Watch, here's the history of the VVIX. History of the VVIX. You're like, oh. So what you're starting to learn right off the bat, okay, volatility of volatility is high. Ultima is incredibly high right now. When people, again, when they start asking what Ultima is, it's the volatility, it's sky high. And most of us in the trading community are executing upon this idea. And I'm going to show you exactly what that idea happens to be here momentarily. But the other aspect that really, really resonates with me right now, skew. Okay. So if you've never heard the term skew, in the center of your screen, I'm going to make this, talking about skew really kind of, I think this like, I don't want to scare the children is what I'm saying. I don't want to scare the children here. Okay. But like when you start looking at skew, distribution curves, you start talking about distribution curves, people typically like, that's it, I'm out of here. You remember skew, it got you through school. Anyway, the distribution curve, people describe markets in distribution curves, and I do too. But the reality is things right now are skewed, highly skewed. And what that basically means is it's a distortion in how things are priced. It's a distortion in how things are priced. But right now, the distortion is massive. And there's actually a symbol for this as well. So it's two symbols you've learned so far, VVIX and skew. What's skew? S as in Sam, K as in kick, E, okay, as in echo, W as in skew. No, Skew is sky high right now and remains incredibly high. And if you've never looked at Skew, well, this is the history. This is the entire history of Skew. Skew was only started tracked in 2011. From 2011 till right to this moment, Skew has never been higher than it is presently. It's crazy. You go, what's Skew? Distortion. What it basically means is option premium is jacked. The premiums are through the roof right now. That's to your advantage. How? How can we use Skew to our advantage? Skew provides edge in the sale of out of the money options. Again, I said the O word. Now that's the third time he said it. Bad animal, bad. No, listen, I'm talking about options because the edge is phenomenal in options right now. And one thing, I just want everybody to know right up front, one thing, over the next few years, what are markets likely to do? I mean, markets have, been pretty much straight up for the last couple of years, right? Lots of Fed intervention. There's been fiscal stimulus. There's been monetary stimulus. There is stimulus everywhere. If that continues, sure, you maybe have a chance. But right now, it appears that this marketplace, in terms of stimulus, forget about S&Ps, forget about NASDAQ for a second, in terms of stimulus and fiscal stimulus and all the packages that are being passed, okay, it appears that it's pretty much top of the game. I think this is as good as it gets. You're going to need, okay, to understand aspects like Skew to produce, okay, profitability moving forward. And that's, I let people know that right up front. Skew provides edge in the sale of out of the money options. Okay. Now, a lot of people here maybe don't know options. That's okay. It is fine for today's session. But the one reality of this, you have to look how many people got involved in the marketplace in just the last 18 months. I mean, if you guys haven't read articles about this, there was 1 month where Robinhood opened 6 million brokerage accounts. 1 month, 6 million brokerage accounts. I couldn't believe that article. Again, I spent 15 years in the brokerage world. Nobody has even heard of opening 6 million accounts in a year. They opened it in 1 month. 6 million people joined. You know what those people are doing? They're buying options. You know how I know they're buying options. How do we know? Because that's all, for the most part, that Robinhood lets you do when you first come on. They might let you sell a covered call, but that's bullish too. But they let you just buy options, okay? And all of these new people are buying options like crazy. What do you think it's doing? Skewing, okay, option premiums. It's literally changing the curve. Just to give you an idea, retail traders, this is what I call retail gone wild. Retail gone wild. So this is, it's last night. So this is a report that comes out nightly. It's the OCC report. That's the Options Clearing Corp. The Option Clearing Corp report comes out. Look, option volume yesterday was a staggering almost 38 million. We'll just round it to 38 million. Do you realize, okay, the September average, yesterday we were below average, but even the year before that, 32 million was actually the norm. So even after the onset of COVID and everything, we're doing even higher volume now. It's insane. It's all retail. Retail they're huge by huge. And most of the retail world is not, okay, selling option premium. What are we going to do? We're going to learn to sell options. Why are we going to learn to sell options? Because many of you have heard through the grapevine that selling options is a good way to make money. I'm going to tell you right now, okay, it is. But if you've experimented with it, you're going to know full well that there's risk. And this is where, some people have sold options. They go, I'm scared of selling options. Hold me. We're going to look at risk mitigation tactics. We're going to make this, okay, as easy and as painless as possible. But there's going to be a little bit of a learning curve right here, right now. Ready? So today's session, I want to separate the myth. Okay. There are myths of selling options from real risks. I want to separate the fact from the fiction about selling options premium. And I'm kind of curious who here has actually sold some options. Anybody? Anybody? All right. So you kind of understand. Some people do have a little bit of a background. All right, we're going to move forward. For those of you that have absolutely unequivocally no options experience, this is your slide. This is where we go. Don't panic. Don't start foaming at the mouth. Maybe you don't know anything about options. It's okay. Okay. The other thing I want to address right up front. This is the big news flash. Don't ever tell me that you don't have enough money to sell options. $2,000 in your account. Okay. And by the way, you can now do this inside of an IRA account. So you can now sell premium inside of an IRA account, but you can do it with as little as $2,000 in a funded brokerage account. And premium selling can now be done in small accounts. There are new products that have come out literally in the last year that now allow you to sell premium and do it in a fashion that only the big boys used to be able to do. And I'm actually going to exploit that today. So for starters, for those of you that are brand new and you're panicking right now about, I got to learn something, listen, learn to grasp big concepts regarding probability and risk. Let's dive right in. Again, if you're brand new, big concepts. If you're experienced, even those that are experienced, yeah, I'm going to rock your world a little bit today because I'm going to throw some curveballs at you, and you're going to want to focus on the little nuances. Many facets of selling premium. So I've already thrown some terms your way that are kind of weird. So I use this term selling premium. Selling premium means selling options. Selling options can be referred to in a number of ways. You can call it premium selling. You can call it credit spreads. You can call it iron condors and short call spreads and short put spreads and delta neutral trading. Yeah, most delta neutral trading, did you know that? Most delta neutral trading is actually premium selling. Somebody's got to do it. Then they're selling naked. I'm out there and I'm loving every minute of it, right? So you can sell naked, but selling premium can be used to create bullish and bearish trades. But generally, it's considered market neutral, which means that today, I'm not going to be talking that much about MACDs and Fibonacci's and Bollinger Bands. You know, that ain't going to be me. Listen, I am a quantitative trader. Okay. Quantitative trader, a quant. What does that effectively mean? It means that I am about probability and profitability. It means, okay, I'm in the numbers. I'm not getting off in the weeds and looking at, the Fibonacci's. Did the Fibonacci people make you do this? Anyway, your trading is based on probability, okay? And you need to understand probability can be very misleading in so many respects. Listen, you and I, we can go out and we can create trades all day long that have a 90% probability of success. But just because you have a 90% probability of making money, it doesn't necessarily mean that you're going to make money. Does that make sense to everybody? Because there's all these sites that go, follow me, come, okay, come. I'm right 90% of the time. So am I. Okay, doesn't mean you're going to be able to make money. I can show you in about 30 seconds. You could be right 90% of the time. You want to see it? Huh? Anybody want to learn how to be right 90% of the time? Go to any major trading application. Go to a trading application. Tell me a stock. Tell me a stock. Give me a stock. Let's go to Apple. Why Apple? Because they build the greatest phones ever. They're faster and bigger than before. But anyway, if you want to go into Apple and you want to be right like 90% of the time, let's get crazy. Let's open up options that are 65 days out. You just switch this little indicator over here. See this little ring right there? You go, oh, options, theoreticals, and Greeks. You go probability, OTM. What's probability OTM? That's probability out of the money, okay? And you look at it and you go, oh, did you know if I sell that, I have a 90% chance of success? Done. That doesn't make me money. Like that's just not gonna do it for me. And I kind of poke fun at this a little bit. Here, I'm opening up Delta. You can see Delta and probability out of the money. By the way, one of my a lot of different hats that I wore at Thinkorswim, but one of them, we built a lot of these probability calculations in here. Okay? And people take this all wrong. If you sell this option, you're going to be right about 90% of the time. But again, don't let that lure you in. Probability alone does not make you profitable. Remember that. Okay. Markets are always a series of trade-offs. Higher probability can be higher risk. You can be right 90% of the time. You can still lose money. So where can you find edge? Because that is, again, you got to get kind of down and dirty with this, like right off the bat. You want, as a retail trader, to find your niche, right? As a retail trader, you got to find edge, something definitive, something you can actually sink your teeth into and know that if you do it again and again and again and again, it's going to produce positive expected returns. And that's when I start saying, and I don't want to geek out on anybody, but it's what we're here for, is to get positive expected returns. It doesn't do anybody good. Like, I was profitable 10 times in a row, and on the 11th time, I got hit by a bus. That's not going to help you. Okay. So get ready, because what I'm about to show you here, this is going to start to get a little bit important, if you will. This is where we're going to discover probability and premium selling tactics. Now, again, if you have no experience whatsoever in the options business, good, it's fine. Let's get started. I'm actually going to throw just a few brief and kind of dirty examples your way. So let's get into it here. I'm getting my my trusty little right on board, all ready to go. So here's a stock, and the stock is trading at 50. And if you've you never tuned in to any of the sessions I've ever done, I don't ever call it a stock. I call it, my fictitious stock is always going to be stock. Okay, because stock is trading right at 50 bucks. And I'm using a fictitious one just to run you through this example, but then I'm going to take you into the live market because, well, why wouldn't we? The markets are open right now. Stock's trading at 50 bucks. Do I own the stock? No. Do I want to own the stock? No. Do I have to own the stock? No. Why not? I don't know. I don't want to tie up 50 bucks, right? I'm going to go out in this first example, and I'm going to talk about, okay, selling, in this case, a 60 call. And we're going to make that 60 call worth exactly $1. So I'm going to put it down below here. We're going to go out and we're going to sell a 60 call. And a 60 call trading for a $1, and that's actually what we call a credit. Now, how long is that good for? Let's say that that option is good for 1 month of time. Pencils down, just stop right there, because this is where we need a little explanation. Okay, so what have I done? Okay, first of all, I put myself in what could be called a categorically high risk trade. But let's assume you're not even familiar with that yet. Okay, I went out and sold a 60 call. Some people have no idea what an option even is. So give me 3 minutes to explain to a couple of the newbies. Any newbies here? Come on, newbies. Who here has never traded an option before? Just Y for yes. Is anybody here never traded an option before? Come on, people. Again, admitting it's the first step, right? So if you've never traded an option before, that's okay. What I want you to understand is in an option marketplace, you can buy them and you can sell them. Buyers have rights, okay? I have the right to do something. Sellers have obligations. You're like, you're obligated to do this. In this case, okay, I'm on the obligation side, so I'm definitely obligated, but I want to teach it from the other perspective. You could go out right now. You could go out right now and you could buy a 60 call. You go, why would I want to do that? I don't know. You're feeling a little froggy. You buy a 60 call. What does the 60 call give you the right to do? It gives you the right to buy the stock at 60. Do you own the stock? No. Do you want to own the stock? No. So why you buy a 60 call? Because the stock's at 50 and it might go above 60. And if it goes above 60, I might make a lot of money because a 60 call gives me the right to buy the stock at 60. Do I have to buy the stock at 60? No. And why do I buy a 60 call? Because you have the right to buy the stock at 60. Because what if you bought the 60 call? You buy the 60 call. 60 call gives you the right to buy the stock at 60. And the stock jumps from 50 and goes all the way to 70 bucks. $70. So if the stock goes to 70, you have the right to buy the stock at 60. Everybody else in the world has to pay 70 for it. So how much is your 60 call worth? How much is a 60 call worth with the stock trading at 70? And the answer is it has to be worth at least $10. It's called intrinsic value. It's $10. Nobody can ever take that away from you. Like people go, what happens if they won't let me out? They have to let you out. That's what this business is about. Because if they don't let you out, you really could say, I'm going to buy the stock at 60, which you could do, and then sell the stock at 70 in the open marketplace, right? But you don't have to do that. You never, ever, ever, ever have to own the stock. And I want to leave you with that impression because stock ties up a ton of capital. And I might be trading with a lot of capital, but you know, the reality is everybody started small, including me. Everybody starts small. So you go out there, you buy a 60 call. Why are you really buying the 60 call? Here's the bottom line, because you think that market's going up. Do you have any idea like how hard it is for a stock to go from 50 and jump all the way to 70? I mean, what do you think this is? AMC, huh? What do you think this is? Okay, it's going to be the next GameStop. All right, but that's what a ton of people are doing right now. They're opening up Robinhood accounts and they're like, big money, no whammies, no whammies. Stop. except if you're a millennial, you wouldn't know what that is, right? But it was a game show a long time ago in a galaxy far, far away. Anyway, when you look at the 60 call, it gives you the right to buy, but I'm not doing that. No, 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 no. I'm taking the other side. Instead of going out and buying the 60 call, okay, I'm selling it. Why? Think about this from a probability standpoint. We'll talk about the sale of the 60 call in a second, but think about it from a probability standpoint. What can this stock do? The stock can stay flat. If it stays flat for a month, you make $1. The stock can go down. How do you get a stock to go down? You buy it. Come on, everybody knows that. Anyway, the stock could go down. If the stock goes down, what do you get to keep? $1. You had to sweat for a month, but you kept $1. The stock could go up. Stock could go up to 55. What do? Nothing. What do you get to keep? $1. The stock go all the way right here to 60. What do you do at that point? You go, oh, I'm going to throw up. I'm wetting myself. The stock can go right to 60. But even if the stock goes to 60, after a month, what would you happen? You collect $1. So only if the stock gets above, not just 60, but 60 plus the $1 you collected. So your break-even point is 61. Do you start actually losing money? See where I'm going with this? Now, again, I'm not suggesting that you run out right now and sell a 60 call because I want to give you the idea and the impression. This first impression is this is about probability. This is a really, really high probability trade because stock can stay flat. You make money. Stock goes down. You make money. Even if the stock goes up, you're still going to probably make money only if the stock gets above 60. But, let's talk about the sale of that 60 call. Selling a 60 call obligates you to give somebody stock at 60. Do you own any stock? You're like, no. Do you want to own the stock? No. Okay. So what happens though if the stock goes from 50 and jumps to 80? What do you mean jumps? Can stocks jump? Yes, it got angry and it jumped. So it goes from 50 and jumps to 80. Like next day it opens at 80. You're like, ah! Why? Because somebody says, I call upon you to give me stock at 60 because you sold them a 60 call. You're obligated to give them stock at 60. You go, but I don't own the stock. So what are you going to have to do? You buy the stock at 80 to give them the stock at 60. By the way, you don't have to have the money in your account to be able to do that. You just lose, in this case, like $20. That's how people get hurt with selling options. If there were only a way you could control that risk, which you absolutely can. The first thing, though, I want you to know about this particular example, and the most imperative thing to know about this example, you ready? This, okay, has upwards of like a 90% probability. Okay, that does. Now, I haven't shown you how to do it right, but I just want you to understand. Just cruise through that example. Okay, is everybody okay? Is everybody okay? Some people understood the no whammies thing. Oh man, these millennials, we got to teach them we must watch old game shows. Let's go into the market now and do it for real. I don't think drinking this Red Bull is helping the caffeine situation. Anyway, I like to do an example on something that's trading like $50. I always look towards like something like Twitter. Twitter's always right around $50, so it's fine. Twitter's at $60, but here, I'll give you the actual example in here. We'll open up. This is what I was doing a little bit earlier. So I opened up the November options in Twitter, and I'll get crazy. Like, look, here's an option, and I'm only selecting this option for one reason. You wonder the reason is it's trading right around $1. In my first example, I was trading around $1. But all I want you to see at this point is, and with all due respect, okay, Twitter is a $61 stock, right? So I want you to see that Twitter, again, is a $61 stock. This is live. It's like it's moving. And if we were watching this right now, you'll actually see it moving. And I could go out and I could sell that little Twitter monkey right there. And I could sell that for just under $1, like 90 cents. And then what do? I go, I sweat for 65 days. Okay, 65 days before I make my dollar. But you got to start to fathom, like, man, that's a lot of distance. It's a lot of distance. I'm selling 75 call. Stock right now is at 61. That's $15. And then you start looking over at the chart. Everybody loves their charts. I'm not a chart guy. It's not me. When was the last time I think even traded at 75? You got to get crazy to get to 75, right? Think about it for a second. It's a really high probability trade. How high? Almost 90%. That's exactly why I wanted to bring you in here. You can see the probability right there. It's about 90%. All right, we ready to move on? Okay, now we're going to get a little bit more serious. Selling options. Selling options equals positive time decay. When you sell options, and you should know this, when you sell options, that every day that passes sees the dwindling of options premium. I don't know, ever since I've been involved in this business, and again, I mean, I remember talking about trading and since I'm 14 years old. Like people always ask me that question, when did you really learn the business? I go, I don't know. You know, it's like somebody like, when did you learn to speak? I don't know. I have no clue. I woke up one day and I could speak options. I don't know. But anyway, theta decay, theta, you know, ever since I remember like options, I always think of like theta decay and like, you know, dumping water on the Wicked Witch. I'm melting because that's what it is. As time passes, the options you sold decay exponentially. So we're going to take a moment to review time decay, but this is an aspect, and I'm going to throw this out here right now. You ready for this? Even for those of you that are incredibly experienced, Ultima Trades has a tremendous amount to do with theta decay. This is where you want to pay very, very careful attention, okay? Because from here on out, you know, we're going into the deep end of the pool. You guys ready? Even for those of you that are experienced, we're going to go into the deep end of the pool because most people, they have a very poor understanding right now of theta decay, and it's not been taught to them in an accurate, okay, in an accurate means. This is actually time decay, and I love to elaborate upon this a little bit. And when I say I love to elaborate, how many people in here have actually bought an option at some point? Almost everybody here has. There's, you know what? I've had about 8 to 10 people come in here and go, no, man, I'm brand new. You know, I've never traded an option, which is cool. But a lot of people have bought options. And I'm going to tell you what the feel is of buying options. So let's go out and let's buy, you know, like some call, like we're going to buy here, a 60 call, right? And the decay graph is going to look something like this. So you buy the 60 call, and we're going to say that 60 call is good for exactly 1 month. What'd you pay for it? You paid $3 for it. So you pay $3 for this 60 call. What does the 60 call give you the right to do? Gives you the right to buy the stock at 60. We're talking about buying options right now, not selling them. So you buy this thing for $3, and then like a week goes by, and after the week goes by, your option's not going to be worth $3 anymore. Let's say nothing happened to the stock. The stock goes up, the stock goes down, but after a week, the stock is where? Massively unchanged. So after a week, your option now is worth $2.80. Okay, am I right? Anybody had this happen to him before? So now your option's worth $2.80, and you go, oh man, a week went by and I lost 20 cents. You go, but I'm okay. I'm okay. I'm okay. I'm okay. And then like the stock still just kind of sputters along. And before you know it, you glance again at your screen, you do a double take. You're like, wait, what? What? Because now the option is worth $2. And then you actually convince yourself at that point when it's worth $2, you go, no, I'm okay. I'm okay. There's plenty of time left, plenty of time. And then before you know it, your $3 is now worth 50 cents. And that's usually when you go, oh. And then you're not even going to sell it because you're so upset that you just lost 250. You just go, I just risk the extra 50 cents. I just risk it because it's not even worth closing anymore for commissions. And then it goes out worthless. Has anybody lived that experience before? You know, and there's a phrase I use all the time here. It's called, I could see your account for 15 years. I could. Not sure if that's a phrase. It's more of a comment, but I could see your account for 15 years. Okay. People think like, how could he possibly know? Okay. I know the exact psychology of this. People email me every single day and they go, oh, I bought something for $3 and then it was worth $2.80 and I was okay. And then it was worth $2 and I wasn't happy, but I was still okay. And then it was worth 50 cents. And I was so angry at myself that I didn't even sell it. And I'm like, oh my gosh, this is the life of the option premium seller. But this decay graph is horribly inaccurate. Okay. This decay graph is what we call an ATM. That's what we call at the money. Options don't really decay like this. And I'm actually going to show you something really, really cool here in a second. Guys, ready? Okay. Because it's going to get good. It's going to get good. Where's it going to get good? Now we're actually going to talk about, once again, probability and premium selling tactics. It's this perfect distribution curve. So now we're going to go out and we're going to sell another option. Okay, I'm going to take the exact same logic as I was using before, but now I'm going to do it on a $100 stock. What's the name of this stock? Okay, you go, it's stock. No, let's give it a real name. Let's call it stock. I'm amused by it, okay? So we go out and we're going to sell, in this case, a 120 call. I'm going to sell a 120 call, and that's going to be trading for exactly a $1 credit. Now I'm trying to keep this consistent. Okay, I'm trying to keep it consistent simply because I think it makes it easier for people, but we're going to do a real example here in a moment. So I'm going to sell this, and again, I'm going to sell, and I bring it down here, a 120 call. The 120 call is trading for exactly $1. Timeout. How long is that option good for? You ready for this? Let's get crazy. It's going to be good for 3 months. Now, I know everybody tunes in here and they go, you told me that I could make monthly income. You can't. We're going to look at an option that's 3 months out right now because I want to prove a point. And it's a big one. Okay. So it's a very, very big one. We're going to sell an option, and it's the 120 call. And we're selling it 3 months out, which is like so far out in time, like 90 days. You're like, I don't even know if we're going to make it another 90 days. They're like, listen, you will. But what's cool about this is the stock is trading at 100. Do I own the stock? No, I do not own the stock. And I'm selling a 120 call, which is 20% out of the money. 20%. That's like the nosebleed seats in a really big stadium. You're so far out, no one could ever get you the ball. Like, people, they go to a stadium like Wrigley and they get, balls hit to them all the time. There's a few stadiums in the Major League Baseball. They could never hit a ball that far. They wouldn't even get close to hitting the ball that far. Okay. That's how far in the nosebleed seats you are. And you're 3 months out. Why? From a probability point of view, the stock could go down. You would make money on here. You'd make part of a buck. Stock could stay flat. And even if the stock goes up, but the stock would have to go up 20% in this case for you to really take a hit. All right. Does that sound reasonable? Yes. If you think about this from a probability point of view, this trade is 90% plus. Okay. But I'm going to show you something incredibly important. Is everybody okay at this point? And I like to make sure that everybody's on the same page, because now what we're going to do is we're going to take this into a real example. When I say a real example, we're going to go, all right, and we're going to get a little crazy with this. All right. We're going to go right into the live market. And in the live market, what's going on today? It's a rally. Okay. Into the live market we go. In this first example, I want to actually use the spiders. Okay. I like to use the spiders. Why? The spiders, it's like the marquee of all marquee products. Okay. Meaning like it really is. It's just a marquee product. And when you look at something like the spiders, you can bet that this is going to be a liquid product, and it's always going to be tradable. When I say it's like a marquee product, just to prove a point over here, look, it's trading 4 million contracts today. It's insane high volume, just insane high volume inside of the spiders. Anyway, in this context, let's go ahead. Let's open the 93-day expiration. 93 days. That's the December expiration. It's exactly what I just kind of mentioned a moment ago. And we're scrolling. Right? We're gonna scroll out here, and I'll tell you what. I'm gonna go to an option that's trading right at $1 because I want to make a point. Right? So I want to trade an option that's right at. Here you go. There. It's $1. So if I were to go out right now, in fact, I'm going to do this example here. Okay, I'm going to kind of elaborate upon this example. I want you to think about going out right now. Okay, and we're going to sell. And this is a DECE 483 call. We're going to sell it exactly for $1. By the way, if I executed right now, I would fill for $1. In fact, I may do that in a moment. So I'm going to sell a DECE 483 call. Okay, that 483 call, that's far out of the money. Okay, it's real. I mean, we're trading at 447. You go, wow, it's about $40 out of there. $40. This is the S&P. That's 400 S&P points. I mean, the S&P going up 400 points. Okay, in 90 days. Could it happen? Yes. It could happen, but I'm going to tell you right now, we're not going to hold this trade for 90 days. Okay. I want to know this. How much money do you think I could make? Because when we were talking about this right on the onset here, I'm going out there and I'm selling a call, and I'm selling a call for $1 and it's way out. It's 90 days out. Okay. All I want to do at this point, though, I want to get in, I want to get out, and I want to be able to make decent profitability. But more importantly and more appropriately, I don't want to take a lot of risk. I want to get in, want to get out. When you look at this trade, people think I can't do that trade. I don't have that kind of margin. You don't worry about that right now. I will take care of the margin side of this for you. And that's important. And I don't mind saying that. Like, I can take care of the margin side of this for you. What I want you to understand is, how much can you make? Okay. In this particular example, how much can you make in 30 days? And to figure that out, we have sold the 483s. Okay. What will it be worth in about 30 days? There's a way to figure that out. If you look at the 93-day option right now, okay, you ready? If you look at the 93-day option right now, in 30 days, it'll be worth about what the 65-day option is worth right now. Meaning, like, by looking at a 93-day option, I could look at the 65-day option and it'll give me like an estimate, assuming no movement happened in the marketplace. What could I make? Well, I'll tell you what, if nothing happens in the market, nothing has happened in the market in a while. I mean, people are like, no, we just keep going up. Okay, we don't. We're actually down a little bit, so nothing's happened, right? So assume nothing happens in the market. What could I make in the next 30 days? Well, for that, we open up the 65-day options, go right out to the 483s. Here they are. There's the 483 calls. They're highlighted on your screen right now. So assuming that nothing happened in the market, I could actually buy back the December 483 calls, okay? And I would actually pay, I'm just going to round it down to 30 cents. I'm going to pay 30 cents for them. What would I make? 70 cents, or approximately 70% are holding a position for less than 30 days. And it's one of the biggest and misunderstood aspects of this entire business, is that right now, if you're selling options, okay, people, they don't get it. People like to sell options with very short amount of time to expiration. Short amount of time to expiration is the equivalency of massive risk. What the retail world, though, is missing is that the options back here, 93 days out, are carrying the juice. The juice is the premium. Okay. I need not spend forever, explaining this, other than to show you, like, look at the 93-day expiration. Look over to the right-hand side. You know what this is? That is what the option's worth. It's 22% implied volatility. That's the number that prices options. Look at some of this short-term stuff. Short-term stuff is trading for what? 16, 17%. Okay. It's elevated back here. There's constant back-end risk. And I'll tell you what, none of that back-end risk has really come to fruition. All I'm getting at right now, and just stabbing at, you're selling an option that's way out of the money, way out of the money. Like, if you looked at this in a distribution curve, you're way out here. And for a whopping 30 days, I know the option's good for 93 days, but in the next 30 days, you can make 60, 70%. You know what? I'm going to cut that back. Even if you can make 50% in the next 30 days, why are you not doing that right now? People go, well, what do I do the rest of the time? You get out and do it again. You go, what do you mean? Well, if you sell an option for 93 days and you buy it back when it only has 60 days, and you do it again, you do it again. What's monthly income? What do you care? Why are you going to sell an option for 7 days? I only have to sweat for 7 days. Okay, that'll be the end of you. You have to realize this is what Ultima has brought us to. Volatility, the volatility, the volatility, it's changed. Skew has changed. This business, okay, isn't always the same. Okay. Why sell options so far out in time? Because that is where the juice happens to be. In fact, and I never, ever, okay, get shy about routing trades. I like to do this, and I like to do this kind of dynamically, because you know what? Positions like this, when I ask, why wouldn't you do this position? All right. And I'll even look. You can even come in here and you can actually look with me. All right. This is actually the marketplace right now is 90 cents at a dollar. Okay, so the market is literally 98 cents at a dollar. I'm going to go in there and I'm going to do what's called carp the market. What's carp in the market? I'm going to come right in between that marketplace. So I'm going to come out here and I'm going to go to the 483s. Okay, the market's 98 a dollar. I'm going to actually split that marketplace right at 99 cents. We're going to see right now if we're going to fill. He shoots, he scores. Let's see. They're going to either move this to 99 cents or they have to fill me. There it is. They moved to 99 cents. Now, if you want to see my trade, okay, when I say you want to see my trade, there I am. Account number and all. Okay, New York Stock Exchange, Captain One Lot rides again. Don't worry about margin. I'll get there. Okay. By the way, they have to trade through me. I'm retail, but I have preferential order treatment. Okay. They're going to fill me. So long as this marketplace has, 2 more cents of upticks, they will fill me on this trade. Just leave it in there. Let it fill. Let it work. Okay. People panic. I'm not filling. Let it fill. Let it work. Let's go back to our examples over here. Listen, you may have noticed again that I sold further out in time, but again, typically these traders, they come in and they sell short dated options, but therein lies specifically why you're tuning into this webcast and why there is specific criteria. And that's the first time that I've actually mentioned that terminology of criteria. Okay. Criteria is what we do here at TheoTrade. Anybody can teach you how to sell options. They don't teach people to do those. What are the right options to sell? Or at least they think they know the right options to sell. Where's the premium out there? Okay. I'm going to show you a bunch of trades here momentarily. Criteria is what we do here at TheoTrade. Now, before we go any further, I'm going to show you the right way to do this. Okay. Before we go any further, there is the 90% probability, but then there's also the 10% hammer. Okay. And what I mean by that is like 90%. So we're doing a trade that has a 90% probability. Okay. But you have to be a little bit, just a little bit kind of afraid out there because some people are not intimately familiar with selling premium. By the way, those of you that have sold premium, and again, I asked this question earlier, how many people have sold premium? Okay. You've experienced this. And I want to bring everybody to the same page about what I term 90% probability and the 10% hammer. 90% probability trades, again, sound great, but 10% of the time, the market just rips your face right off. And only people that have actually sold premium understand this. When you trade high probability strategies, when you trade really high probability and you're wrong, okay, they get out the 20-pound sledgehammer and they just take off a finger. It's brutal. And we have to teach you, okay, not to go down this same path. What path am I talking about? For those of you that have experience, think about this. If you have experience, what have you done? You've done a strategy called iron condors. Come on, who's done iron condors? Once again, admitting it is the first step, right? We're live over here, so I like to see some feedback. Who here has done iron condors? What's an iron condor? An iron condor is when you sell a call, like I just did a moment ago, and you sell a put. And then you buy a call and buy a put. And the risk graph looks like this. Goes, oh, like, wait, like that. That's the risk graph. I'm pretty good at that, huh? Hey, that took years. I couldn't get it right. It's hard. I could see the camera a little bit. Anyway, the risk graph. So people go out and they learn this strategy called the iron condor and they dabble and they go into a product called the spiders, which we just traded a moment ago. And in the spiders, they do a 1 contract iron condor and they go, yeah, baby, I did it. And guess what? You did it for 1 month. And the very first month you did it, it made money. You're like, oh, this crap actually worked. Nothing I've done before worked, but this worked. Okay. Right. And then you went out and you did it again. You go, oh my gosh, it worked again. And by the third time you do it, you're like, squawking your feathers. You're like, I know what I'm doing. So when this is on the 3rd month, you're strutting your stuff. And now you're not doing 1 contract in the spiders anymore. Now you're doing like 7 contracts in the spiders. And guess what? In the 3rd month, you're right again. By the 4th month, then you learn about this product called the SPX. What's the SPX? It is the beast. It is the mother of all products. It's where good traders go to die. So you go into the SPX and you go, I'm going to be the next Buffett. And now you're doing 10 contracts in the SPX. By the way, for those of you that don't speak SPX, the SPX is 10 times the size of the spiders. So if you're doing 10 contracts in the SPX, it's the same thing as 100 contracts in the spiders. So you went in 4 months from a 1 lot in the spiders to a 100 lot, in the spiders. Well, but you get smart. You do 10 lot in the SPX, you're like, and the marketplace knows exactly how to do this. The marketplace is evil. It's an entity. It's come on, come on, come on. It gets you roped in, and then boom, absolute train wreck. Train wreck. You know how many times I've watched this? So people get train wrecked, and the losses that you took on one trade exceeded not only all the gains, it also, okay, evidently it was smart and it knew how to take out 50% of your entire account if you're lucky. Because I guarantee you that somebody listening to this right now is probably thinking, they're like, what can this guy do? Can he see my account? Yes, I can see your account. I did for 15 years. Every thought that you're ever going to have in this business, I've had, or I've seen you have. I've seen everybody panic at the same time. You realize that watching people trade from the other side of the screen. What's the other side of the screen? First, from the market maker side. And secondly, okay, from working at like Thinkorswim and TD Ameritrade, watching from the other side of the screen, it's like watching a B-rated horror movie. And it's like watching that same movie again and again and again and again. And you've seen, exactly where the axe murderer is in this movie. They're like, lady, don't go in there. Ugh, dead. Okay, come on, lady. I told you don't go in there. And you watch it again and again. You run the education firm of the biggest client order flow on the street, and you're like, you can't say anything to these people because FINRA, which is, basically a regulatory authority, says you can't tell people what you know about their trading. Well, guess what? I don't work for TD Ameritrade no more. Okay, I'm not under FINRA no more. So what do? We give you everything over here. We give you absolutely everything. We give you exactly what we know about client order flow. So people go out, okay. People go out. I like what actually somebody said. You're explaining why you don't trade anymore. So people go out and they do this and they make money, make money, make money, make money. Boom, got hit by a train they never saw coming. And then they're convinced I did something wrong. It was me. Okay. It's me, it's not you. So it's me, it's not you. Really. So then they go out and they take another class and they learn to fix trades. I just, fix is such a dirty word. I'm totally the cynic when it comes to fixing. 15 years in the brokerage business will make you a cynic about a lot of stuff, but fixing a trade, by the way, anytime you fix, do you want to know what the word fix really means to me? Fix means more commissions. You go, commissions are free. I'm at Robinhood. Okay, great. More commissions, okay, and more risk. There's unequivocally no way that you can fix a trade without taking a shovel out and just digging deeper. Okay, like what is fixing a trade? It's opening up your wallet and going, just take it all, man. I mean, literally, it's opening up your wallet. You have to put more risk in to fix anything. And anytime you're fixing a trade, you're adding more risk to an already losing position. But nobody ever looks at it that way because you're not. It's not adding more risk. Really, it's not. It's fixing risk. Like, well, we're getting into semantics over here, but some fixes may work, but the very notion of fix just throws more good capital than a very dark hole, right? You got to throw out bad trades like yesterday's trash. And the best analogy I ever heard over the years of this, and here's the best analogy I can give you. And another trader gave me this on the floor, like I'm talking way back, like 99, 2000. And he explained it as this: you take a car and you just drive it off a cliff. Hopefully you're not in it. And then you bring it to a body shop. The body shop's going to look at the car and they go, what do you want me to do with this? It's a nice amalgamation. It's a pile of junk. Okay. It's a piece of crap. Let it go. And I'm going to say the exact same thing about your trade. Okay. You need to learn to do this the right way. You need to learn, okay, how to not necessarily fix, but correct, okay, trades, to go in there and correct the entire position. And that's exactly what we're going to discuss here. Okay. Selling options premium. Ultimate trades is much deeper, okay, than just going out and selling stuff. Anybody can go out, anybody right now, you can go out and you go, what am I going to do? I'm going to sell stuff here and I'm going to sell stuff here. Then what I'm going to do? I'm going to pray. Pray what? That we stay somewhere in here, okay? Contrary to popular belief, prayer has historically not worked very well in the marketplace, only because there's always somebody praying on the other side. The marketplace goes the other direction. So with this, when you're selling options premium, okay, there are hedges that you must learn. Okay, let's present. Let us present. Bring on the hedges. Okay, there are three. Count them. Whoops. It would help if I could actually write them, by the way. Whenever I write on the screen, it takes a few seconds before I can see it. So I come in here and there are three definitive hedges. What does that mean? One of the hedges is called, okay, a risk twist spread. The other hedge is called a VIX vol spread. And last, but definitely not least, we have the beast, a gamma iron condor. So I'm going to explain those three here just momentarily. Okay, risk twist spread, VIX volatility spread, gamma iron. What are those? Okay, that's a presentation of the hedges. What are the hedges? The hedges are a risk mitigation, okay, tactic that are put into play before we ever actually go out and sell any premium. Why would you do that? Because you're crazy if you think you're going to go out there and just sell stuff and always make money. You're absolutely nuts. You go out there and sell stuff and you go, I sold stuff and I sold stuff and I sold stuff. Okay, you're going to be eventually a sitting duck. I mean, what do you think, the marketplace is not going to crash? You think the marketplace is always going to be, you know, on the up and up? Just turn a light on in here. Okay. And I do apologize. We're going through torrential storms outside right now. It's awesome. So these are your three hedges. I'm going to explain how the hedges work, okay, in context of selling premium. So like I did in the aforementioned examples, okay, now we're going to talk a little bit about the spiders themselves, okay? So where are the spiders trading? And I know they're like, you know, 445-ish, but here, we're not going to use stock anymore. We're actually going to use the SPY. And we're going to say the SPY is trading at 450, okay? So the SPY is trading right at 450. We're going to come all the way out here and we're going to sell, okay, a 483 call. And maybe we're going to collect $1 on it, and that's fine, okay? Simultaneously, we're going to come all the way out here, way out here, and we're actually going to sell. And I didn't cover puts too much over here because puts can be a little bit misleading for some people, all right? But we're going to sell in this case 350 put. And that put is way out of the money, okay? So bear with me here as I get into this. So in this particular example, what I want you to see for the first time, and I'm kind of presenting it here for the first time, all right? If you look to the upside of this, okay, yeah, we're that far out of the money, you know, from 450 to 483, whatever, it's $30, $40 out of the money. But to the downside, it's huge. And that is what Skew, okay, is all about. I mean, the Skew is massive, and it means, what that Skew means is this put that you're selling, that put is probably going to be trading still for $2. We'll look at it in a moment. But I'm not going to actually stop there. So yes, the spiders are trading right at 450, and we're selling a 483 call, and we're selling a 350 put. As long as we stay in that massive range, we're going to make money. But I'm not going to stop there. As I said, I'm going to go out here as the market moves. I'm probably going to end up selling like some 490s. Eventually, I'll end up, if the market sells off a little bit, I'll sell some like, you know, 470 calls. Okay, these are all calls. Okay, and on the flip side of this, again, on the flip side of this, I'm out there and I'm selling, for instance, a 320 put. Maybe I'm selling, okay, like a 380 put. I mean, we're talking super far out of the money. And I want you just to get comfortable with this idea. I'm selling a couple of calls way out of the money and a couple puts way out of the money. And I'm doing this as the marketplace is fluctuating. Okay, but I can't just stop there because sooner or later, especially those of you that have had experience will understand this, and I'll put it in some context for you, okay? Sooner or later, you're gonna wake up one day, that marketplace isn't gonna be at 450. That marketplace is gonna come tearing down. This is where a risk twist, a VIX vol, and a gamma iron can be helpful. You don't have to know how to place all three of these, okay? This is just, it's comfortability. It's comfortability. I'm gonna give you what a VIX vol spread is. Anybody know again what the VIX is? We talked about the VIX a little bit, right? What's the VIX? The VIX is the S&P 500 volatility index. You tell me, what does the VIX typically do? If the market goes down, the VIX goes where? Exploding up. What happens if we placed a very, very small, but very powerful strategy in VIX? That if the market crashes, which is an anomaly unto itself, can the market crash? Yes. How often does the market crash? Not that often. But when it does, it knows, okay, where you live. And that's not comfortable because people have been on the wrong side of it. So when the market goes down, the VIX goes up. But we placed this very minuscule trade on the VIX, a very inexpensive trade. But I'll tell you what, when the market comes tearing down, okay, our VIX trade will explode in value. And the VIX trade will literally cover a lot of this risk out here. And that's what it's designed to do. It's a VIX volatility spread. Is it going to cover all the risk? Absolutely not. It doesn't need to cover all the risk. Okay. All the VIX trade has to do, it doesn't have to get me out unscathed. Okay. It has to get me out of the way of getting hit by a Mack truck. And if you've never been on the wrong side of the marketplace before, you don't know what the Mack truck looks like. Okay. Guess what? Neither do traders that are new to this business. They don't know what a Mack truck looks like. Okay. Until their back is turned and it runs them right over. The VIX volatility spread is going to save, okay, your proverbial behind in the event that the marketplace tanks. Okay. That's the easiest explanation. We can actually describe to you not only exactly how to do this trade, but how many to do versus what size of the portfolio. You can do this with $250,000. You could do this with $2,000. Doesn't make a difference. So I don't want to, I only have $2,000. Of course you can do this. People go, I can't sell naked. Don't worry about that part. I got you covered on there, right? You got to learn something like a VIX volatility spread because what the VIX does, it puffs up. Okay, the trade explodes in value when the marketplace crashes. But then you look at this and go, what happens if we rally big? We also use a trade called the gamma iron. The gamma iron is what we term the inside hedge. What a gamma iron does is if we explode to the upside, we have to pass through the gamma iron to actually tag any of your risk. Upside risk is easy to deal with. You go, well, how is that possible? Because when the market explodes up, volatility goes, volatility doesn't do anything. Okay. You want to feel the fear? Feel the fear of a marketplace crashing. You don't feel the fear when marketplace is rallying. You go, here it comes. It's easy to hedge. That's what the gamma iron is for. This is what selling options premium is to us. But you got to know which of these options to sell, how far out in time, how many hedges, how many gamma irons do I put on for how many options if I sold, how many VIX volatility spreads, what expiration cycle do I use those? This is what selling premium is about, okay? And I'm telling you right now, what we're talking about here, this is why you want to sell premium. And I'm going to tell you right off the bat, you're going to need this in your life, okay? You're going to need this because as I said from the get-go today, this marketplace right now, I don't want to say it's a ticking time bomb, but I think you and I kind of have to come to the conclusion that, are you comfortable like right now buying a stock at the all-time high? Like, do you want to be that person? What do I mean? What do I mean by that phrase? What do you want to be? You want to be that person. What's that? The person that bought Microsoft at the all-time high. The person that bought Google shares at an all-time high. The person that stepped in and actually thought AMC was going to be a real company one day at the all-time high. You got to learn how to sell premium. You got to learn how to sell premium. You got to learn how to manage the risk. Premium can now be sold in extremely small accounts, under $5,000. So you have to have $2,000 in a regular margin account. You have to have $2,000 in an IRA. You have to have $5,000. You can sell all the premium you want. It produces positive theta decay. You can actually use this, okay, not necessarily in autonomy. You realize that maybe you own stock right now. Some people go, you know what? Microsoft, I've owned it since 20 bucks. It's now at 300. Gold, Jerry, gold. Cool. This would actually teach you, okay, to sell the right options against your Microsoft stock. Ultima Premium isn't just used in autonomy. Ultima Premium and Ultima Premium selling ideas and strategies, this can be used against existing positions, provides an incredibly high probability of success. You never need to buy or sell the stock. That's up to you. If you already own some Microsoft, you already own some Apple, that's fine, but you never need to buy or sell the stock. And you could be wrong about market direction, okay, and still produce very profitable trades. And that's why I'm saying you need this in your life. Listen, selling premium could potentially bring in consistent returns. The big key in here is while minimizing your risk. We're actually going to talk a little bit about selling premium and risks the right way. And we're going to talk a bit about criteria. All right. Before I talk a bit about criteria, and I start talking about criteria, I'm talking about the specifics. Okay. What makes a good ultimate trade? Like, you saw me selling premium out 3 months from now. So what actually comprises a good premium selling trade? Before I get there, I'm actually going to give you a few live trading examples. And to that extent, okay, the live trading examples, I'm going to give you everything I've done on a year-to-date basis, okay, in the Ultima, okay, TheoTrade portfolio. This is a portfolio, okay, that you can track verbatim, day for day, trade for trade. And I'm going to show you everything I've actually done on the portfolio, okay, right until year to date. And I'm going to rip through them really, really quick, but I'm going to show you how it works here. So here's some live trading examples. By the way, variations of all the following trades can be done with as little as $2,000 in a funded brokerage account. That's probably like the 10th time I've mentioned that, because immediately, whenever I talk about selling premium, people always have the assumption that I can't do this. And now you can do it in a retirement account too. In fact, okay, I'll show you this. This is a retirement account. There's a retirement account in here that has like 100 grand in it. This is actually done on the retirement account. I have another account just sitting there. Literally, I just opened, okay, that retirement account days ago. So it's critical to see that. So let's actually jump into it. I'm going to show you some of the trades from the TheoTrade portfolio. Now that portfolio, okay, resides over here. And I'm going to actually show you what trades look like. In fact, this first one, just an example here, this is a Tesla, okay, short call, Tesla short call. And this is the opening and closing position. If you look at your screen right now, just a brief explanation, the exact date and time I opened the trade, closed the trade. And I know this one is back in, almost a year ago. It's okay. I'm just warming up to show you what it is. This is the opening position, the closing position, okay? The underlying, not only is the underlying mentioned here, this is the underlying, this is the expiration cycle, okay? You're also looking specifically here at which option, 950 call, the opening price, the closing price, and then the percentage return. Where is this a screenshot of? And that's what I wanted to mention, okay? This happens to be a screenshot specifically, okay, from right here. This is the account statement from Thinkorswim. And look back like 100 days, but watch. We'll go into Tesla. Okay. I haven't done a huge number of trades in Tesla, but I just want to give you a quick feel of exactly what you're looking at. We'll go into Tesla. Okay. And I'll open up all the trade history. Oops, it would help if I actually put in Tesla. I'll open up all the trade history. Not a huge amount of history in Tesla, but you can see there's the 950, the opening, and the 950 closing, okay? So you can see the opening and closing positions. There's the 390 opening, the 65 cents close. And again, all I did is took that and copied and pasted it into my slide deck. And I did that because I think it makes it easier. So you guys ready? You wanna see some Ultima Premium over here, okay? Let's get ready for it. Tesla short call, 83% return. This is one where I've actually sold the 950 call and bought back the 950 call all in a really short period of time, only about the 5-day trade for 83% return. This is another Tesla short call. Now again, Tesla, this is not like the preeminent part of the portfolio, okay? Here on Tesla, I was just trying to display to you how I copy and pasted some of the trades. Okay, another Tesla. Now, here we are actually starting with the some of the TheoTrade portfolio. This is the bond short put for a 57% return. Bonds. Not everybody here, okay? Apologize. There's sounds in the background. The whole place is vibrating. Big thunderstorm right now. So live on an island and you get some pretty wild weather. And we're in the middle right now of some fairly wild weather. Bonds. You're not familiar with bonds, or maybe you are familiar with bonds, but I like to trade bonds. And I was pretty comfortable, like, presenting this to everybody. And it's like, what do you mean? You can do this in bonds? Sure. Bonds have options on them too. So I went out and sold a bond, the 161 puts for 14 ticks, bought it back for 6 ticks, 57% return. Here's another bond short put, 53% return. Here's an IWM short call, 62% return. Now, IWM, if you're not familiar with it, it's the Russell 2000 iShares. Here's another IWM, 53%. Tesla short call, 76% return. Whoops. SPY short put, 60% return. SPY short put, 50% return. SPY short put, 51% return. And I'm just going through and I want you to see as I actually scroll through these. January, okay? We're just moving along here, okay? We're starting to actually bridge our way into February. SPY short call, 50% return. QQQ, what's the QQQ? It's the NASDAQ 100, 62% return. QQQ short call, 53% return. QQQ short call, 50% return. QQQ short call, 50% return. QQQ short call, 64% return. Again, I can just keep scrolling through these all day long. 53% return, okay? 57%. IWM, 56% return. IWM, 50% return. You would think that I would change a lot of underlyings. I really don't. 54% return. IWM short call, 19% loss. Okay, I'm going to show you winners. I'm going to show you losers. I'm going to tell you right now, there have not been a lot of losers in here, but this was a point in time. I was selling calls in the IWM. The IWM at the beginning of the year was straight up. I mean, literally, the IWM was straight up. And again, for disclosure, I will show every single trade that I do in a given product. By the way, you'll see iron condors. No, those are actually gamma iron condors. Those are buy-side iron condors to actually mitigate exposure. And in this particular case, you can see everything. Okay, literally what I bought, what I sold, the day I bought and sold it, it's all in here. Okay, all the IWM positions. Obviously, I'm trading that a little bit more heavily. I've got about 80 fills in there. Okay, this is a 19% loss, 54% return. QQQ, 52% return. IWM, 49% return. IWM short put, 47% return. QQQ short put, 49% return. QQQ short put, 51% return. Bond short call, 50% return. IWM short call, 54% return. Okay, IWM short call, 51%, 50%. SPY short call, by the way, we're only in March, 50%. I'll speed up, I can do it. IWM short call, 53%, 50% a short put. Again, bond short put. IWM short call, 51%, short put. Okay, 52%, 50%, 52%, 53% a bond short put. Bond short put, 73%. Bond short put, 59%. Bond short put, 56%. IWM short call, 52%. IWM short call, 50%. IWM short call, 51%. Mo short put. Still, my heart, I actually traded a stock, 53%. This was actually a trade I was upset about because I wanted to do more, and it moved in my favor in a day. Bond short put, 50% return. Bond short call, 50%. Tesla short call, 53%. QQQ short call, 54%. Amazon short call, 63%. Whoops, I missed one. QQQ short call, 50%. QQQ short call, 53%. 51%, 50%. QQQ short put, 55%, SPY short put, 51%. We're getting into May, 51%, 50%, 52%. ES short put, timeout. At this point, I think it's actually relatively important to tell you that this is trading options on futures. When you trade options on futures, this option on future is exactly 5 times the size of the spiders. So if it's 5 times the size of the spiders, it's 5 times the size of the spiders. So trading one contract in the options on futures contract, okay, is 5 times the size. So why did I switch? I switched for this reason. This is a portfolio that we're running in front of clientele. And after we got through pretty much the first quarter of trades, everybody was a little bit more comfortable with this. So we actually stepped up into a slightly larger product to also knock down some of the commission costs right? So it's one of the reasons I started trading S&P options and futures in here. Here's another one: short put 50%, short call 50%, short put 51%, QQQ short call 51%, ES short put 51%, ES short call 50%, ES short call 51%, 56%, bond short call 53%, SPY short call. I still trade the spiders a little bit, 50%, bond short call 54%. We're getting really, really recent. Bond short call 50%. Bond short call 58%, QQQ short call 54%, QQQ short call 56%, 31% on a QQQ short call. This is actually a Christmas tree trade. Again, we got a little bit more advanced after we got through half the year. I started actually running some high skew Christmas tree trades. This is an 85% return, by the way, which is a grand slam home run in here. It's about a $700 profit, even if you did one contract on the trade. QQQ short call 57%, TLT short call 53%, S&P options on future short call 55%, SPY short call just closed this one the other day for a 19% return. That one got close. Okay, ES short call 57% return. Okay, and the SPY short call 50% return. Woof! I just took you up to date on basically every trade that I've actually done inside of what we term the Theo theta. This is Ultima trades. Okay, this is selling out of the money premium and mitigating exposure in here. And I'm going to tell you right now, this is the time you need to learn this. There's no question about it. You're going to learn a skill set that's going to last a lifetime. And I always tell people this as well. Like, when are you ever going to have time like this? Most people are probably working from home at this point. And if you're not, that's okay. This is not like a full-time skill set. This is, you've got to learn it. You've got to execute. And the trades that I'm showing today are really, okay, very part-time, which I'll mention here momentarily. But if you're quarantined, it's a great way to come out and emerge stronger in great financial shape. And I mentioned quarantine. Most of us right now are probably not, but my closest friend is actually an Aussie. I lived over in Australia for about a year and a half, and he's still under like quarantine and constantly talking about, you know, trading, because he's up at all hours of the night. But again, it's a phenomenal time to learn the skill set, because this is what you're going to need for the foreseeable future. What our members are saying: Mike Phipps, I want to thank Don Kaufman and TheoTrade for doing a great trade. Stefan, I really want to thank, I really think that Theo is the best educational money I ever spent. Okay, not a lot of time is not going to be a huge problem. Listen, you have to learn the basis of Ultimate Trades. You have to learn the skill set. You have to learn the hedges. But each and every trade that I just displayed, and I just ran through the entire portfolio, and as annoying as it is saying 52%, 50%, 50%, every single trade was displayed live. We did text messaging, push notifications. Okay, the trade results though are perfect for part-timers. You can even use good till canceled orders to execute yourself out of these positions. Selling premium, okay, with Ultimate Trades is extraordinarily hands-off. So even a fraction of your time is going to be enough to see decent results with this. I don't want you to think that you're in front of the computer sweating every single moment of every single day. And that's why I put this in here. It's a very part-time skill set. Some characteristics of selling Ultima Premium. The attributes of this are undeniable. You never have to buy or sell the stock. Risk is going to be tailored. You know, I don't even like to use the term limited, but you can tailor risk to precisely your comfort level. You don't need to use a stop order. We don't use stop orders of any kind here, because stop orders, they work, okay? And they'll work, but at the worst possible time of your life. I mean, that's what it's designed to do. You can vary timeframes, but varying timeframes actually helps you minimize more risk. The probability of profit is extraordinarily high. The best analogy I could give you for selling options premium, okay, is, you know, you're out there and you're flying an airplane. Most of the time when you fly an airplane, what happens? Nothing. I mean, like literally, you fly an airplane and nothing ever happens. And there's that like 1% of the time you're like, oh my gosh, something's going on in the marketplace. Selling premiums like the exact same way. Again, that probability is sky high. It's 90, 95%. The perfect strategy to enhance one's stocks portfolio, but it's also an excellent tool to generate returns to build a smaller account. And the most imperative thing is here, I showed you the spiders and Tesla and this and that. But what most people are not aware of is that new products actually allow for the sale of options in nearly any account size. And it's one of these, like, it's this contrast, this change that's happened Most people are unaware because the brokerage firms are not exactly out there advertising like, yeah, here's a new product. No one cares because it's not in their best interest to tell you there's a new product out. The product, okay? I mean, when I say product, it's something to trade. There's a product that you can trade now, all right, that lets you sell premium with extraordinarily small amounts of margin, extraordinarily small amounts of risk, and you need to take advantage of it. Building an options, okay, portfolio. Don't let the options portion of this intimidate you. Like, don't let, the fact that maybe you've never traded options, don't let that intimidate you. And then some of you have actually, traded options over there. And it's critical that you understand that selling premium with what we do, okay, is a vast departure from anything you've done before. By the way, somebody's saying, yeah, we absolutely text trades. I texted a trade today. I'm looking for like my phone over here. Okay. I texted out a brand new trade, literally today. You can see every single trade, okay, that we execute upon. And I think that part is also of critical importance that okay, when I say we text out a trade, like you probably can't see that, but I will literally show everybody like every single text that we send out regarding different trades and so forth, right? We even build a mobile application and do push notifications if you can't receive text messages. Listen, the sale of premium can be done for minimal credits, but minimal risk. But the sale of premium, you got to understand, if you've never traded options before, options are like the power tools of the marketplace. Options would be the quickest, the fastest, the safest, the easiest way to get where you want to go in this business. Okay. But if you don't use them correctly, you can hurt yourself. And the same thing is true, if you had a chainsaw, you didn't know how to use a chainsaw right, you probably lop off a couple of fingers and maybe an arm. Options are the exact same thing. Used incorrectly, you can lop off a couple of fingers. Used correctly, they're extremely effective at creating returns. Okay. You can sell Ultima Premium, minimize risk. Again, if you don't have a lot of experience in options, don't let that portion intimidate you. The one thing that's really striking right now about this business is there's a lot of people that trade options that don't really know what they're doing. And they don't see what's coming. You're going to need these strategies for the foreseeable market future. We can show you how and when to sell premium in a matter of hours. And what we do here at TheoTrade is we create detailed recipes for every strategy, including, okay, the sale of Ultima Premium. And I guess the first way to explain this is you wouldn't bake a cake without a recipe, so why trade without one, right? Listen, this is what you need to know to successfully sell Ultima Premium for a living, all right? Start with this. What underlying stocks or indices make the best Ultima Premium candidates? You just saw, okay? How boring was it when I went through all the different trades? All right. When I say that, I mean, I'm not trying to be facetious. How boring was it when I went through all the trades? I did IWM and IWM and IWM and then the QQQ and then the spiders and S&P options and then bonds. And then once in a while, I did IWM and the QQQ and the spiders and options and bonds. You do the same thing again and again. Okay. And you know what? When you have good results, you don't change that. And people go, don't you want to trade something crazy? No, I really don't. Okay. I am here to make money. I am not here, okay, because I want to get free popcorn from AMC for being a shareholder over there. I'm dead serious about here. You got to know exactly what underlying stocks, indices make the best Ultima Premium selling candidates. What volatility should you seek out? I'm going to tell you right now, Tesla, I put in the Tesla example because it was an anomaly. The Tesla is probably not a great candidate for selling premium. It's not, okay, because it actually is too volatile at times. There's actually a volatility window of opportunity, okay? Too high, you're already dead. Too low, you're already dead. You have to fit within the construct, okay, that we provide. This is what criteria does for you. What options expiration do I select? Let's talk a little bit about expiration for a second. Go over to the trade tab. I'm going to pull up the SPX, and I just want to make just a brief point. The SPX, okay? Look at the SPX, right? The mother of all products. Look how many expirations are in here, okay? And it's crazy. It is absolutely crazy how many expirations are in the SPX, okay? 14 days and 50 days and 12 days and 90 days and, end of month and AM and PM settlement. How about this? You got to zero in on exactly what expiration cycle you select, okay? What should be the delta of the option you sell? there are over 1,000 options listed in every single expiration month, week. Okay. Think about how many options are listed in there. Okay. You have only tens of thousands to select from. You need to hit the right delta. What should be the delta of the options you sell? What options do I buy against my position? So not only do we have to worry about options that I sell, then we got to actually fine tune what do I buy? That's the hedge. That's the VIX volatility spread. How do I build the position? How many VIX spreads do I need against my spider trade? How many VIX spreads do I need against an S&P options on future? How many VIX spreads do I need against the QQQ or the IWM? Okay, that is what criteria does. Do we need a large amount of capital in my account to do this? Absolutely not. I keep harping on this one because it's probably the big sticking point for people, right? What is the right amount of risk for me? Again, we can actually tailor risk depending upon, right, where you want to be. There's actually a phrase that I'll use called risk array. We can take you into a risk array and we can actually literally tailor risk. And when I say tailor risk, like I mean legitimately, okay, fine tune and tailor that risk. What are the percentage returns supposed to be? By the way, did you see some of the percentage returns in here? What did I hit? 50%, 50%, 50%, 50%, 50%. But then you don't think about 50%. Those are the individual trades. What are the returns supposed to be in the entire portfolio? Right? We get into that. How do I protect myself from market crashes? That's the VIX volatility spread. That's the risk twist spread. That's the gamma iron. Hedges, people. Okay. Hedges will keep you alive in this business. Hedges will keep you sane in this business. Hedges, okay, are what you have to be able to sell Ultima Premium. Let me show you exactly what we do here at TheoTrade. TheoTrade creates recipes in trading. Okay. Because you're going to learn one way or the other. When I say TheoTrade creates recipes in trading, you'll learn trading's all about answering the what ifs. What might be a good stock or ETF candidate? What's the correct options expiration cycle? How much capital do you commit? Which strike price options do you sell? What strike price options do I buy? How much, risk do I take? Can I limit my risk? We have those answers. What we do here is we build recipes with definitive criteria. We build checklists for each strategy and then each unique variable that you're going to encounter. When I say checklists, okay, I go back to the analogy that I was talking about a little bit earlier with a pilot, okay? It's a pre-flight checklist. In fact, the entire idea behind us creating these checklists literally comes from my own travel. I traveled everywhere. You sit in an airplane, and before the airplane takes off, you're always looking up at the cockpit because there's nothing else exciting going on in the airplane, especially lately, right? So you're always looking up at the cockpit and before they take off, well before they take off, the cockpit doors open. They literally sit there with checklists. Okay. The pilot literally gets out, walks around the planes, always like pulling on the engines. That part always killed me. Okay. I'm like, oh, look, the engine, it shook. That doesn't make me feel warm and fuzzy. But they go through these really, really detailed pre-flight checklists. And then once they've actually, nobody gets into a 747, throttle up and takes off. They go through some really detailed checklists. After they do that, once they're actually in the air, they have checklists for that too. What if we go up? What if we go down? What if, the marketplace is crashing? That's not good. That's what these checklists are based on. Every single variable that you could come across in this business, right? TheoTrade has the answer to those questions. We'll give you the right probability, give you how many option contracts do you trade for the account size? When do you close your premium sale? What if the stock sells off big? Do you bail out of the trade? What if we rally massively? What if dividend is coming? What if expiration is coming? What if we fix a losing position? How many VIX volatility spreads do we put on? We can go forever on here. It's the how, it's the when, it's the why, it's at what price. And I'm telling you right now, that is just the beginning of the variables that you're going to face while selling Ultima options for a living. Listen, you can read what selling premium is about. You can read all about selling premium. 10,000 different pages are going to come up on Google when you talk about like selling premium in there. You Google selling premium, okay? You might even know how to build a few trades. Some people have actually sold premium. That's not what we're here for. What we're here for is TheoTrade's recipe for success, okay? 20 years plus trading experience. That's just me. There's 7 other full-time traders here, okay? I had access to client order flow for 15 years, and we have viewed and studied millions of trading accounts. I ran education for both Thinkorswim and TD Ameritrade for the better part of 15 years, and we had the largest option order flow. This is where criteria is generated from. Criteria, though, is the recipe for success, right? The following strategy and the corresponding criteria require the utmost attention to detail. We literally spent years fine-tuning, okay, Ultima trades and Ultima premium selling. So when we approach the section on criteria, you follow the steps to be able to build a trade, okay? We have a 5-hour course ready to go. It's the Ultima Income Generator course, okay? That 5-hour course was put together by me. When I say it's ready to go, we recorded this, okay, weeks back, cleaned it up, all right? And it's ready as an on-demand recording for you. But before I go any further, and I tell this people right up front, the class includes, okay, the slide deck with entry and exit criteria, and it's available immediately for download. And before I go any further, there are incredible incentives for TheoTrade, okay? But I also want you guys to understand one huge aspect here that I think differentiates TheoTrade. And before I even get into what this Ultima class kind of includes, I think you have a pretty good idea of what the Ultima class includes. It teaches you literally how to sell premium, okay, soup to nuts, every single step along the way. And if you've never had experience trading before, we're actually going to get you ramped up. The one huge contrast here at TheoTrade, and I want you guys to understand this, okay, before I go any further, and before, again, I describe the Ultima class, I want you to understand something, okay? I had this 15-year period of my career where I was building education, okay, for people just like yourself. If you traded at Thinkorswim, or if you traded at TD Ameritrade and used the Thinkorswim platform, okay, I've already influenced everything and touched everything that you're ever going to trade. Everything from tools, okay, that you use on Thinkorswim. What do you think those tools are designed by? By researching some of your trades, okay? We've already touched everything you're going to do. Actually, one of our instructors here had built over half the studies on Thinkorswim charts, Jeff Bierman, okay? The aspect that I like to tell people, I had 15 years, I had a bird's eye view of all the education companies out there. And what all the education companies do in this business, they go out and they sell a class for 500 bucks, right? It's a class, just like we brought up. Then they go out, okay, for another 500, they give you an indicator. That indicator goes with the class. The irony is you bought an indicator for 500 after taking a $500 class. You probably have to take another $500 class just to learn how to use the indicator. And before you know it, all of this is obsolete. And there's another class for $500. This is not how we operate here, right? Right off the bat. Again, I'm going to tell you more about the Ultima class. Before I do that, I want you guys to understand what TheoTrade is and what we do. We provide you right off the bat everything that you're ever going to need in this business, whether it's trading, whether it's investing, whether it's selling premium, everything. In terms of support, email us. Can you ask specific questions? Of course, you can ask specific questions. Okay? You can bounce trade ideas off of us. Most of us are in the brokerage business 10, 15, even 20 years. Okay? If you need something in this business, we provide it for you. We provide you the classes to get ramped up. Okay? We provide you the trades. There's no additional costs here. Okay? There's no additional costs here for you seeing our portfolio. We are a no holds barred firm. If I make money, if I lose money, you get to see every single trade. We text out trades. We do push notifications. We built our own mobile application just so that you can see everything that we do. And we think that that's important, okay? I'm also going to tell you this. We give you access to every single class in our library from day one. You enroll for this class today, and you get to see every other class that we've ever done. Why do we do that? Okay, because we built like a Netflix for traders. Every genre of trade, whether it's intraday, whether it's this, okay, all with finite criteria. You could go out and you could spend $30,000 on a stock market education, okay? You're gonna be blown away that we do here. You just be absolutely blown away. You could spend $30,000. It will pale in comparison to what you'll get here at TheoTrade for a few $100. And we provide everything you're gonna need, no introductory prices, nothing like that. And I'm going to show you that right now. And I think it's important, though, that I bring that to you before even going to this, because a lot of people, they come here and they're like, here comes, you know, what do I got to buy? Okay. I'm going to tell you right now, you don't have to buy anything. Okay. But if you want, okay, to not only survive in this business, to thrive, bar none. If you can't get it done here, you can't get it done, right? There is no other firm at any price, okay, that you can gain this kind of experience. And that's exactly what I'm going to present to you here momentarily. So the Ultima Income Generator course. I happen to be the trade instructor for this one. And again, we have 7 other instructors that do their own classes. This is a 5-hour course. It's archived already. It's available immediately for streaming. And we stream to any device. You can stream to your computer. You can stream to your iPad. By the way, if you have an iPad, you can download our mobile application or an iPhone, okay, or an Android tablet. You can download the app, you can download the file, and you can watch it offline. So we have, again, mobile applications for iOS and Android. The class slide deck that includes all of the criteria is available immediately, okay? So here is the kind of itinerary for the class. The Ultimate Income Generator course curriculum. So obviously you're going to learn how to generate consistent returns with selling options. And here's that curriculum. You're going to learn how to build a portfolio of high probability trades that generates consistent monthly returns, regardless of starting capital. We actually have an entire section that talks about that, which I'll get to here momentarily. Second point over here, there is detailed entry and exit criteria for selling options premium while keeping risks. When I say detailed entry and exit criteria, step 1, step 2, step 3, step 4, step 5, step 6, literally we do step by step. You go through a checklist. And then after you know what you're doing, we have like a Cliff Note version of this. Okay, next, discover option Greeks and learn how to manage all of your positions through one easy number. You're also going to learn how to use a risk array in order to visualize profits and risk before markets ever move. That is what I was talking about with kind of tailoring your risk. You're going to learn how to properly allocate in a way that reduces risk and allows you to minimize any risk in your portfolio really, really part-time. So for a few minutes on a weekend, you can actually look at a portfolio and you're going to be able to gauge if we go up huge, down huge, how much you're going to make or lose. Okay. And then you can further like tighten up the risk in that portfolio. You're going to discover, okay, risk mitigation techniques. This is your hedges, right? Designed to really withstand some of the most extreme market environments. You're never going to get caught off guard. And again, there is a huge portion of this course that discusses selling premium and small accounts and or retirement accounts with innovative, okay, new products and trading vehicles that only been available for about a year. That's some of the course curriculum. On top of it, TheoTrade is completely riskless trade. It's a 90-day money-back guarantee. I throw this to you right up front because I want people to recognize and rationalize, okay, listen, there's absolutely no risk to you. And we don't have stipulations on a money-back guarantee. So if you have questions and so forth, which we'll answer here momentarily, okay, I want you guys to know if you're not satisfied anytime in the next 90 days, just email. You don't have to call us. Don't call us, okay? You don't have to give us a song and dance. There's no excuses, no questions, no commentary. Just email us. If you're not happy in the next 90 days, we'll give you your money back. Listen, it's a few $100. And we have 6,000 right now users on TheoTrade, meaning 6,000 people are presently and active on TheoTrade, not 6,000 like all time. 6,000 are presently on TheoTrade. We want every single one of them, okay, to want to be on TheoTrade. We don't even do memberships anymore, meaning that, you know, if you want to be here, you have to be here and you pay, okay? And that's okay. And if you're not happy anytime in the next 90 days, now I know some people like go out there and they go, I'm going to watch everything I possibly can in the next 90 days. That's fine. Like, we get it. You're going to watch a lot of stuff we have for the next 90 days. You can binge watch everything we have in the next 90 days, okay? And I promise you something, you're going to love it. And you're going to want to do another 90 days. And that's just how we work. So again, we want you to be here, but we want you to be happy being here. We don't want anybody, okay, that's not thrilled with what they're getting here, okay? And again, it's a few $100. So email us at any point. If you're not happy, receive a full refund, and that's fine in the next 90 days. You can go to TheoTrade, TheoTrade.com/Skew. /Skew. It's S as in Sam, K as in kick, E as in echo, W. TheoTrade.com/Skew. And I do want to make a quick mention of that really quick. All righty here. Come over to TheoTrade.com/Skew. Okay. When you click add to cart, okay, and then I'm just displaying this real quick because I'm going to go through a lot of the other bonuses. When you go to add to cart, put your phone number in, okay? it actually automatically then enrolls you for the text messages. If there's any question about that, by all means, by the way, I can give you all the payment details here, and I'll do that here momentarily. But I just wanted you to see that TheoTrade.com/Skew. No, okay, that it's 90 days completely risk-free. And that's, I hope, makes people feel warm and fuzzy. That's what it's designed to do, simply because we want you to be here. But we want to make sure that you're happy being here. We don't want you to feel like, oh, I got to learn everything I can in the next 90 days. It's okay. Like, take your time. Okay. Come in here, learn Ultimate Trades, and we'll go from there. All right. You want a bonus. And this is what I was saying. TheoTrade's not just a standalone like Ultimate Trade class. We go beyond one class or one indicator. We get that people want everything to trade and invest, and they want it at one place and one price. Bonus number one, quick start beginner's guide to Theo, which basically is what? If you've never put on a trade before, I'm going to give you, it's my training. I actually did all of the beginner's guide. It'll take you from complete newbie to entering into your first trade. If you're kind of curious what that looks like, let's actually jump to it. This is a start here menu. On the start here menu, options 101, options 201, options 301, literally takes you through. And then we go into like, a little more hardcore, preparing for your trading day, order execution part 1, 2, and 3. Hey, I'll challenge you. Even the most experienced trader in here, I'll tell you right now, watch order execution part 1, 2, and 3. You're going to be ecstatic with what you learn in here. This is where I'm telling you, even the basics here, I'm going to go, why am I going to be ecstatic about order execution? I'm going to teach you to get better fills. I spent 15 years in the brokerage business. I know every nuance, okay, of your order being delivered from the time you hit confirm and send to the time your order execution comes back. I know every nuance on every single platform out there, whether it's Tastyworks, whether it's Interactive Brokers, whether it's, Charles Schwab, TD Ameritrade, which is now the same company, Robinhood. We describe exactly how the order execution works and how to get better fills. Okay, that's order execution part 1, 2, and 3. And I'm serious. Write that stuff down. Even if you're experienced, you're going to want to see this. And I know that, it's the start here menu. Okay, those that actually have a complete blank slate. If you've never traded options, you almost have like an advantage because you didn't know any better. You just watched these. You're going to be ramped up for it. Okay, this is just the start here menu. All right, that's bonus number one. Bonus number two, we give you access to over 100 trading classes. What does that mean? Everything we've done here at TheoTrade in terms of classes and curriculums since day one. We launched TheoTrade in 2016. I only left TD Ameritrade 2015. Okay, I had to spend a year out of the business, came back into the business a year later. Here we are. There have been subsequently over 100 classes at TheoTrade. And again, there's 7 full-time instructors and then myself here, which I'll introduce momentarily. Some of those classes include guide, of course, the ultimate income generator is what people are coming here, guide to small account, in-out spreads. In-out spreads is probably the most prolific class we ever did here in terms of the number of people that have watched it, okay, and actually traded it. Guide to surviving extreme volatility back spreads, how to collect income being short, risk twist spreads, day trading NASDAQ futures, iron condor, selling premium, minimizing risk, covered calls, okay, pairs trading, every genre of trade. We have trend traders, okay? We even have traders that are into psychology. I mean, we literally have a psychologist, trader with us, which I'll describe here momentarily. All of this you gain access to like immediately. And I want to show you what this looks like as well. This is the class archive, okay? You get access to this today. Literally click like on option strategies over here. So click on option strategies. What do we go into? Here's the Ultima class, okay? And this is the most recent class that we've done. Tracking unusual option activity, gamma irons, volatility crash course, okay? Guide to surviving in extreme volatility, part 1 and 2. Guide to maximum edge trading earnings. It just goes on and on. Gamma irons. It's actually one of my favorite courses that I've put together. But to give you an idea of the depth of this, okay, option Greeks, guide to ratio butterflies. You're like, this is too much. I don't know. Would you rather be overwhelmed or underwhelmed? There's a reason we have 6,000 clients on here, right? There is something in here for basically everyone. We didn't stop with one genre of trading. Okay? We cover it all. So you get access to everything from day one. Bonus number 3, all access TheoTrade VIP membership. What this is, it's 3 months, okay? access to our trading room, access to, okay, our traders, meaning that you can actually email us, bounce ideas off of us. All right, let me go through it. It's 3 months, unlimited access to TheoStream. It's a live trading chat room. Now, we broadcast 6 hours plus a day. I know that not everybody can watch us 6 hours a day. Like, I get it. You're not designed to sit there all day, every single day, but we do have that. I know other firms that charge $300 a month just to watch their trading room. Okay. Not only do you get to watch the trading room, we'll actually go ahead and text and do push notification of trade ideas. There's 5 different trading portfolios. There's also daily coaching sessions with timely topics. And this, I put the most weight into this. Our instructors will directly answer your trading questions. You don't have to shy away and be like, so my friend had this position on that isn't going, her direction. Like, seriously, come clean, right? Just be like, hey, I have a really crappy position on. Can you help me with this? We're there. Okay, it's okay. You realize if we could save you on one trade, how much will that actually save you dollars wise? If we can actually give you an idea that you didn't see otherwise, okay, I don't know, a couple thousand, a few hundred at minimum. Think about that for a second. You can bounce ideas off of this, and we do not shy away from answering trade related questions. Okay. And again, the chat room, if you want to see what the chat room looks like, let's do it. Okay. This is live and uncut. I'm going to mute it right now, but I am actually going into TheoTrade because when I say it's live, okay, this is trading live. So this is actually Tony Rago. Tony Rago is our NASDAQ futures specialist. What does Tony do all day? Trades NASDAQ. What does Tony do all day? Trades NASDAQ. Throughout the course of the day, he just calls out setups. Okay. These are actually links to all of his studies that are in here. It just goes on, right? 88 should get a test, right? And these are the instructors that are highlighted. You come through here. In a given day, there are thousands of different individuals that are actually in here, okay, in our chat room. In fact, our chat room now actually hosts more people than any other chat room, even including trading applications out there right now. It's awesome. I mean, there's thousands and thousands of messages. We actually hit over 1 million messages a week. And I can even show you that in here too. It's pretty cool. But you're actually seeing Tony's screen live right now because of course the marketplace is still open for about another hour. We're even going to do a chat right now after the close. So after enrolling today, you can actually hop right into the chat room and literally you can watch, them after the close here. All right, onward and upward of there. So you get access to the chat room, the trade ideas, okay, text message of trades, all the portfolios, and we answer emails. Next on here, this is actually the TheoTrade instructors: Jeff Bierman, Matt Williamson, Corey Rosenblum, Brandon Chapman, okay, Steve Miller, Tony Rago, and Blake Young. Jeff Bierman, okay, Brandon Chapman and Blake Young also come from both Thinkorswim and TD Ameritrade. They worked in the education division, and naturally, when I left, it was a good time to leave. Jeff Bierman is also a professor of finance at Loyola. He's actually teaching a course at Loyola this particular semester. He's also a CMT, and he built over half the studies on Thinkorswim. Matt Williamson, market neutral premium selling. Matt is very much almost like an engineer into spreadsheets and so forth, and actually deals with really a lot of our quantitative traders. Corey Rosenblum, he's our another CMT, senior strategist and our resident swing trader. Brandon Chapman, CMT. Brandon actually wrote the course manuals for TD Ameritrade. TD Ameritrade used to offer a class that was 18 months long, and it cost $24,000. I bet anything some of you guys actually took that. Okay, so Brandon Chapman put together the entire course manual there. He'll be the first one to tell you what they did. Okay, and it cost $24,000. It pales in comparison to what we offer here at TheoTrade. Next in the docket, Slim Miller. Slim actually is a 43-year veteran, stock options and futures trading. Slim is our resident psychologist here in terms of traders at TheoTrade. I'll show you his class in a minute. Tony Rago, we just showed him a second ago on the screen. He's a NASDAQ and intraday strategist. And Blake Young, thrilled to actually get Blake Young. Market profile. I've been looking for a strong market profile guy for years, and I finally talked Blake Young into, we didn't work together for a period of almost 5 years. I finally talked him into coming back into it. He's just a trader, okay? And he worked with us at Thinkorswim and TD Ameritrade, and I finally said, listen, he hung it up and just traded for his own. I said, come on, man, it's only, an hour plus a day. And we got Blake Young, market profile, again, futures, currency, and commodity trader. This is actually some of the crew here at TheoTrade. Again, we're all working from home as well. We give you access to 59 proprietary indicators and scans. Anything that we build, we give you access to. auto expected move, gravity points. By the way, I'm going to give you the link to auto expected moves here. Everybody that's in attendance today will get that. I'll give you the link here momentarily. S&P gravity points, TheoTrade, RSI, Laguerre, Quantix, cumulative tick indicator, NQ levels. Okay, next generation squeeze, complex position tracker, IV rank for percentile, Theo Quant, which I use every single day, unusual put options activity, Sizzle, SPX expected move. There's a ton of, it's another $1,800 in indicators. And again, I stress to you guys, we give all of you all of this literally from day one. Again, it's why we have 6,000 members here. Okay, Theo Theta Live Portfolio. Okay, this is the portfolio that I just showed you a few minutes ago. This is going through every single trade. This is the positive theta. It's the ultimate premium selling portfolio. It's just a no holds barred approach. You get to see everything that I do. Full disclosure, every single trade, every opening position, every closing position, every hedging position. You get to watch me trade live. Okay. Now I know some people they're like, I can't watch you all day. It's crazy. Every week on a Friday, we record, and I'll show you in a moment, we record a 12-minute video that updates you on everything that we've done. So if I text out a trade, you get updated on it, at the end of the week. And these are not trades that you have to rush into place, okay? Don't worry. They're going to be there. We're going to be here, all right? We also have the Theo Theta small portfolio. For those of you that are just kind of getting started out, you have a $2,000 account, you have a $5,000 account, you have a $10,000 account, but you want to sell premium, you can do it with me. I've actually got the small portfolio running, okay? And you get to follow every single move. We just executed a trade into it yesterday. The portfolios could not look any more simplistic. They are literally spreadsheets. Why do we do that? Because you can actually take these trades, okay? Apologize. You can take these trades and you can copy and paste them. You can literally highlight and copy and paste the trades, all right? So they're actually in format. So we show you all the opening positions, all the closing positions. As I said, we even do a weekly video update. And I harp on this one because the weekly video update in 12 minutes, you get to see everything that we did throughout the course of the week in terms of the Theo Theta portfolio. Theo Theta and Theo Theta small portfolios, it's all covered in 12 minutes on one update. So it's a wonderful way to go through. Bonus number 5, there's the technical analysis toolkit. 101, 201 MACD indicators. Most of these are actually done by Professor Jeff Bierman. Number 6, day trading treasure chest. This is actually predominantly done by Corey Rosenblum and Tony Rago, who are more of our intraday traders. Intraday NASDAQ futures, day trading ES futures blueprint, consistent intraday strategies and setups. That absolutely is my course. Nevertheless, okay, if you want to be a little bit more in the day trading side of things, it's included here, okay? Bonus number 7, mindset mastery. This, to me, is one of the most important classes. You could be experienced in it, you could be a newbie, and I'm serious, write this down. 5 essential building blocks to successful trading, okay? It's Slim Miller's class. When we originally put this class out, we did actually charge $1,000 for it. Now it's included, okay? It's in the library. We finally included it. It is a phenomenal class. It's going to change the entire way that you view taking risk and approaching the marketplace. And for those of you that have been knocked around in this business, okay, and I just stress you, if you've been ever knocked around in this business, you need to watch this. And if you've never been in this business, you need to watch this, okay? I've spent 20 something years in this business and watched this, and I'm like, wow. I mean, it's eye-opening. And if you don't know anything about, Steve Slim Miller, back in the 1980s, when he was still on the floor, he used to take 7-figure profit and loss every single day. It's $1 million plus P&L as one individual, not working for a trading firm. You take literally millions of dollars of risk every single day. An individual like that, listen, this class, okay, it's worth its weight in gold. It changed the way that I view approaching risk, and you never saw anything like this until this point. I'm serious. Watch this class. I say write it down because there's a lot of stuff I'm running through and it's easy to forget, okay? But I put a huge amount of weight into what Steve Miller has to say in here. Bonus number 8, it's a quick start guide to Ultima trades. It's getting started with Ultima trades. Like every time you buy some piece of technology, you open it up and there's a quick start guide. And we loved that idea. We just loved it because there's like a Cliff Note version to selling premium. Some of you have enough experience that just hop right in there, open up the quick start guide, It's a PDF file, and it'll actually take you through, okay, this is where you're going to start. This is how you're going to actually sell premium, right? Those are some of our bonuses. What our members are saying, this actually comes from Jeremiah, my first four trades, okay, following exactly the details in your Ultima class. Just closed out using GTC orders, that stands for good till canceled orders, set right after getting into the trade. This paid for your class in less than a week. I'm very thankful I subscribed to your services. Keep up the good work. Thanks, Jeremiah. By the way, somebody else that commented in the chat room said, thanks. I joined in June. It all worked out. Learned a lot. Okay. And yeah, I appreciate that stuff. TheoTrade. Okay. Again, we include everything that you're going to need to invest, everything you need to trade. There's classes, there's coaching, there's email access to the instructors, there's a live trading room, live trades, okay? Text, push notification, mobile access 24/7. You can stream it anytime. It's everything that you're going to need to succeed. We built what we believe is the Netflix for traders. It's $297 for 3 months. Okay. And with all of those incentives, it's $297 for 3 months. And I'm going to tell you right off the bat, before I even go into detail, it's TheoTrade.com/Skew. You can enroll there while I'm telling you about this. Remember, there's a completely riskless trade for the next 90 days, which again, I'll also kind of, go through here again in a moment. The $297, I get this question a lot, and I'm just going to address it immediately, right? This is not an introductory price. It's $297 for 3 months. It's actually not a membership. After 3 months, everybody goes, what happens to me after 3 months? We send you an email and say, do you want to enroll for another 3 months? Yes. I'll go, okay, we'll charge you $297. There's no change, and contrast in there. You're not, quote unquote, a member. You subscribe to TheoTrade, but it's on a 3-month basis. So it's $297 for 3 months. If you want to do it again after 3 months, $297. Okay. And it includes everything. And it's why, you're like, oh, I kind of get it. What do you get? That's why we have 6,000 members on here. People they want to come here. Once in a while, somebody okay, I left for 3 months. I took off the summer. Don't worry, you'll be back. Nobody leaves TheoTrade. You can't get, okay, anything like this. Again, anywhere in this industry, you could spend $30,000. As I said, it'll pale in comparison to not only the education, but the support that we give. Email us. You'll see, we email you right back. Okay, we email you back. You get different trade ideas, bounce trade ideas off of us. Okay, if we can save you once on a trade, I bet you it'll save you more than $300. And that's why it's worthwhile. I mean, you email us once a month. That's up to you. You can email us as much as you want, right? So again, access to over 100 trading classes, new monthly classes, the trading room, 59 proprietary indicators, text and push notifications, okay? And we do daily coaching sessions, which is continued education, new classes. By the way, I didn't even stress that. There's new classes. I'm doing a new class. It's coming, okay? We're just a few weeks away from a brand new class that I'm actually gonna do myself. And again, our instructors directly answer your trading questions, all right, via email. Go to TheoTrade.com/Skew. I also wanted to emphasize TheoTrade's completely riskless trade. There's a 90-day money-back guarantee. I know this is the second time I've mentioned it, but it's important that you guys know it's only $297. Okay. If you're not totally satisfied anytime in the next 90 days, it's only $300. We'll give you your money back. All right. Just email us. You don't have to call us or anything like that. Email us, support@theotrade.com, receive a full refund. There's absolutely no stipulations. We used to have stipulations like you got to trade, you got to do this, you got to do a little dance, make a little love, get down tonight. We wiped all those away. Just listen, there's just no excuses. There's no questions. There's no commentary needed. Again, we want people that want to be here, right? And if you do actually receive a refund, we'll give you bonus number 1, which is the quick start guide. We give you that for free forever. Okay, you get to keep bonus number 1. Get into TheoTrade now. We're going to work with you directly. We give 30 spots, okay, on the TheoTrade riskless deal. And we do that specifically to incentivize you. So the first 30 people that enroll today get a 90-day money-back guarantee, right? And we do that because, well, we provide unlimited email mentoring. We want each and every one of you, of course, to enroll and to be part of TheoTrade. But at the same time, there's 8 instructors and there's 6,000, clientele over here. We're happy at that number. And we really are happy at that number. So we give you 30 spots, and I'll even read off the just the first names of individuals that enroll. And as you enroll, I'll read off just your first name and let you know that you enrolled and got into one of the first 30 spots. But again, we give you unlimited email mentoring, which I don't think is done really anywhere at the level to which we are taking it. The $297 riskless offer has never been available before with Ultima Income Generator Plus, the new TheoTrade portfolio. So what our members are saying, closed my year-to-date profit from Ultima Trades is paid for my yearly TheoTrade subscription. That comes from John. This is everything you get today. Ultima course, quick start guide, 100 different trading classes. We give you access to our chat room, access to us on email, the TheoTrade portfolio, so you can watch all of my trades. We give you the technical analysis toolkit, the day trading treasure chest, mindset mastery, and the quick start guide. Okay, go right now to theotrade.com/skew. And I'm going to pop this back up on the screen because I did want to mention one aspect here really quick. As you go to theotrade.com/skew, as I said, there are 30 riskless spots left. If you have questions, you can hit us actually in the Zoom chat room, or we actually are available in here. But as you scroll down, okay, click add to cart. And I'm bringing this up once again because I just want to make sure everybody sees it. Please put your phone number in here if you would like. It auto enrolls you for text messages, but I want you to know you're not going to get 10 text messages a day. We send a few text messages a week. We don't want to bombard you with text messages. So fill out the phone number in there. If you're overseas and can't necessarily get text messages, just download the mobile application. The other aspect is you can do a single payment, 2 payments, 3 payments. That's up to you. I mean, listen, it's $300, but it's about your comfortability. And no, it's a 90-day money-back guarantee for the first 30 people that enroll today. And again, we do that to incentivize you. Towards the bottom of this screen, for those of you looking for the link to the indicator, scroll all the way down to the bottom of the screen. The auto expected move indicator is located on the bottom of the screen. Those of you, if and as you are enrolling, you need not download that indicator. Okay, the indicator is available to you on the TheoTrade site. Again, we give you every single indicator, so you don't have to run to that. So again, the URL in here is theotrade.com/skew. Somebody was just asking that again a second ago. It's S as in Sam, K, E as in Echo, W. So theotrade.com/skew. I'm going to go in here and I'm going to answer a couple of questions, really specific questions for you. By the way, one of our members is saying, I like this one, like last year, but I wanted to drop you a quick email. I think the class is wonderful. I've been stretched each session, but not beyond my capability. After each session, I watch the recording, do the homework. I feel each week that my knowledge of options trading is growing steadily and rapidly. I obviously can't speak for my classmates, but it's going very well for me. It comes from Jeff. Next one on here is one other one I really like to show this because it comes from a guy by the name of Todd Summerall. And I just want you guys to get a feel for the kinds of emails that we get. It says, don't know if you remember me, but I emailed you weeks ago and told you my delta was positive a couple thou or more. Basically what this meant, this guy had this massive portfolio and it was really heavily allocated to one stock. And it says, you told me to smash it or I was going to be in trouble. I smashed it. That means rip the position off. You got to get it off. You saved my account. I just want to thank you for your information. Before Theo, I had no clue about Portfolio Delta. Big hearty thanks to you and all of your team. My finances would have been a goner without your advice. You can use this if you want. And I do. And I'll tell you why I use that one, because I want you to know the level of detail that we're capable of answering inside of these emails, that I think a lot of people would always shy away from, direct trade related questions. I say, bring it. Almost everybody on our team here at TheoTrade, okay, we carried brokerage licenses at one point or another. Just me specifically, I had a series 3, which is about futures. I had a series 4, which is a principal options broker dealer. I had a series 7, which of course is your general, brokerage account test. I had my series 24, which is a principal broker dealer. So not only the options broker dealer, but principal broker dealer. Then I had a series, people are not familiar with this, is 66, which is a 63 and 65 combined. I was a registered investment advisor as well, because I did, in fact, manage over $300 million of capital at the inception of Thinkorswim. So there's no questions like we haven't seen or haven't heard. I'm really comfortable not only with myself answering these questions, but most of our crew here at TheoTrade, we go back, like we've been together now for not only the 5 years here at TheoTrade. Blake Young, has worked with me at some point going back over 15 years. Jeff Bierman and I mean, oh my gosh, we have over 15 years of experience together. Slim Miller, I met Slim when I was a kid, like literally a child. And that's the level of where we go back together. And I think that's important that you guys should know that as well. This is not a new crew being put together over here. Most of us have actually not only been in the marketplace for over 15 years, but most of us has been together, working together pretty much seamlessly for that period of time. All right. General questions. People always ask me, what do you need to get started here? You need a laptop, an internet connection. I'll tell you what, you don't even need a laptop anymore. These little iPads and Android devices, they've actually gotten literally that much better. So I urge you that you don't even necessarily need, that laptop in there. Okay. So it's pretty interesting that the technology has come that far, and we really have. So we have everything, and it's, I state this, and I'm going to answer some questions. By the way, I can see questions specifically coming up on here, and I will also read off the names of a few of you that are enrolling right now. And I just want you guys to know, it takes me about 5 to 7 minutes before I actually see you enroll here. So just give me a few minutes as I actually look through here, and I'll read some of the names off, and then I'm going to read some of the specific questions off. We have everything you're going to need. And I actually say this all the time, but if there's something you need in this business that we don't have, I want to know about it. Like, shoot me an email and say, hey, like, listen, you need this. Okay. We even started putting together, somebody said there was some service that had like unusual options activity on it. Brandon Chapman does that now for us. So, I mean, Brandon Chapman's like literally, he's, providing us unusual options activity. I make mention of it because, man, it takes him a long time to do that every day. And I don't think enough people actually even know we have it. I'm just mentioning it because other services, they charge $300 a month just for that. $300 a month for this, $300. Everything here is $300 for like, for 3 months. Okay. Number two, it's not a membership. We're not going to auto renew or bill you again. So if you want to do this, you tell us, we do it, but it's not a membership. It doesn't ever auto renew. Number three, where you give you weekly updates. There's a weekly video in 12 minutes. We tell you everything we do in the Theo Theta portfolio. Number four, we archive everything. We understand you can't watch everything every single day. So we archive it. And what's really cool about the archive is you can actually play the archive back at like 2 times the speed. A sound like a chipmunk, but it's awesome. Number five, we give you access to TheoTrade Mobile. Now, the mobile application, allows you to see, us on mobile. Now you can actually log in over a browser like on an iPad, but if you want, you can also pull up TheoTrade Mobile on your iPad and so forth. And when you do that, that's fine with us. Like you can watch all the videos and stuff here. We have a lot of clients that not only trade off the iPad, which I think is cool. I love actually trading on the iPad. I've always been asked why, and I'm like, you touch the market. It's cool. Like I just love the idea of trading from the iPad. Or I actually recently just brought an Android tablet so we could just test our Android system. And I got to tell you, the Android tablet, it ain't bad either. The thing's really good. So we give you access to mobile. Number six, add your cell phone number to get the text messages. Number seven, you can email us anytime, receive a response within 24 hours. Just to throw one caveat out here, most of the time you get a response back like that. Our average response time, right now is actually under 8 hours. I can see the average response time of an email. The average response time is like under 8 hours, but I'm just going to throw something out to you. Please do not email me with 5 minutes to go on expiration Friday. People, we trade. Like I trade and I'm live on here, but I trade, and can promise you traders don't look at that email when there's 5 minutes to go on an expiration Friday especially when we're, I'll push some serious size into my trades and I'll get back to you. But I actually answer emails, me personally, before and right after the market closes. But with that being said, you can go in, if it's during the trading day, you can go right into our live trading room and you can just fire questions right away live, okay, in the trading room. There's nothing wrong with that. Everybody does it every single day. You'd hop on there first thing in the morning, be like, hey Don, what do you think about this? We'll answer your questions. But I just want you guys to know that we put that caveat in there so that you don't email us with 5 minutes to go to the close. Okay. Number 8, you're going to gain access to everything we've done in the previous 5 years. It's tens of thousands of hours, classes, coaching, live trading sessions, every word that any of us have spoken on TheoTrade is, for better or for worse, is all recorded and all in there live. We have a little bloopers roll in there too. It's good stuff. Number 9, variations of trades available inside of an IRA or retirement account. Okay, so you can do variations of these trades with as little as $2,000. Number 10, we can help you get approved for options trading at several major brokerage firms. Okay, that's important to us as well. Like a lot of people are going to come to us, they go, I can't do that trade. I can't do what you did. And the reality is you can. Not every brokerage firm lets you do, okay, what you want to do with your money. And if I'm critical about a firm like Robinhood, I don't have any skin in the game in Robinhood, positive or negative, but I don't like that they don't let their clients do what their clients want to do. They actually restrict you in what you can do, and they put on training wheels, and I don't like that. I feel it's your money, and with the right understanding, as long as you do understand what the risks are, you click a button and say, yeah, I do understand those risks and I want to be able to do this, and that's fine. Okay, and we'll hold your hand in those trades as well. Listen, there are 30 riskless trade spots available. Okay, get results, take action, roll for TheoTrade now. Now I'm going to answer a couple of direct questions over here. Okay, this is again a couple of what our members are saying. Your organization continues to blow me away with insights, expertise, resources, okay, and structure. Okay, I've learned so much, be able to apply the knowledge and improve my trading exponentially. Thank you, and thanks for everything. I'm grateful I found TheoTrade. I'm grateful I had a sense to choose your organization as my mentor over all the other players in the marketplace. Now that you've added Blake Young, who style and enjoy immensely, starting to adopt, don't know what else to say except TheoTrade's awesome. Thank you from Southern California. So I'll pop back up to this, and I'm going to answer some specific questions that have actually come up in the chat. Again, it's theotrade.com/skew. The first batch of names that have come through, Jens K from Norway. I apologize. I think that's with a Jens, isn't that Jens? Okay, Jens K from Norway. So I apologize. I'm just glancing over here. Eric O from California, Beverly G from Pennsylvania, Mark G from California, Stephen from Nevada, Richard H from Wisconsin, Chris G from Florida, Richard G from Florida, David H from Arizona. I'll read off another batch of names as they actually come in. Again, it takes anywhere from 5 to 7 minutes before I see those. Let me get to some specific trade related questions in here because I'm actually going to pull them up on my iPad right now and see if I can't get some of these more detailed questions answered. Okay. Oh, I like this one. The first one, somebody said, which hedge do you use? How do you determine the hedge to be used? Okay. So which hedge to be used and determining the hedge is completely dependent upon volatility at any given point in time. So I think it's critical to understand that, and whereby when you're looking at a hedge, like the VIX volatility spreads right now, that's what I would use. If you said, Don, how do you hedge this market right now today? It's going to be a VIX volatility spread. The VIX, it's not extremely high, but it's not extremely low relative to like the lowest it's been recently is about 16. But the VIX vol spread is pricing most effectively at this point, and will actually show you, okay, through a number of steps and lead you to specifically the right hedge. That to me, when you're thinking about ultimate trades and premium selling, that's not only the right question, that's the key to this. Honestly, that's like the key to this. Anybody can go out and sell premium. Anybody can go out, oh yeah, sell premium 90 days out. Of course you could do that. They don't know how to hedge. Okay. And you need to know not only how to build the hedge, but if things get crazy in the market, you got to know how to exit that hedge. That's what we do here. Like those little nuances. Trading, it's not about telling somebody to sell premium 90 days out. That part is a layup. That's easy. Trading is about what to do while the market's actually in motion. The if, the and, the but. What if we rally? What if we sell off? It's crazy out there sometimes. And you got to know that. And that's exactly what we're going to help you with. Okay. Are all these trades 30 days, some shorter, some longer? Yeah, no, the time frame, the average, when you sell an option and you're holding it, the average time that you will hold that is just above 30 days. It's just above 30 days. So if you looked back at my portfolio, and I did actually look back and, for a period of about 6 months, and, I just averaged out how many days did I hold this? How many days? It's just over 30 days. It's the average actually hold premium, like hold time from the premium sale. So it's another actually really, really good question. Another name showed up here, Albert C. from Tennessee. Next one on here. Okay. I love your idea of needing hedges going forward, but the cost of hedges has always scared me. Can you please show me the cost of the hedge? Okay. You know what? Here, I'll do you one better. I'll show you the cost of the hedge, but I'm going to do this in a little bit of a convoluted fashion. Okay. The gamma iron will probably be a little bit confusing. So I think that the best way to show you a hedge would be here in the VIX. And you can see, first of all, I've got one of the VIX hedges on. Okay. I'll just run you into a very, very simplistic idea. And by the way, this is not like, the greatest trade I'm ever going to place over here. I'm just trying to piecemeal this little monkey together. So here we go. What are we doing? What are we doing? What are we doing? Is our math good enough to figure this out in our head? And the answer is sure it is. Okay. I'll go a little further out of the money with that one. 35. I'll knock this down to 25. 36. Do I hear 40? Go up to the 26s. Yeah, here's an idea. Okay, there you go. This is the sale of a $5 wide put spread to finance the cost of a call spread. In effect, the hedge would cost you nothing up front. Could you lose money in this? You could, but only if the VIX collapses down, and it gave you 62 days as a hedge. So I don't like to pay for my hedges up front. I actually like to use little nuances like sell put spreads to finance it. Okay, I'm always looking to finance something. Selling premium is in the blood. And if you do take a loss on the puts, like if you think about this, if you sell a put spread in the VIX and you're like, oh, I lost 500 bucks. It's actually a good thing because it means all the puts you sold in the S&Ps made money. Think about that for a second. If you lose on the hedge, people go, you could lose money on that, Don. Yeah, I know. But if you lose money, you're like, yes, it's the best money you ever lost. If you're losing money on the hedge, doesn't it mean the primary position went well? Nobody ever looks at it that way. You should, but nobody ever looks at it that way because most retail traders are just taught like, get bullish, get bearish. A guy on TV throwing a chair said so. And that's not what it's about. It's never been about that for us. All right. Oh, I like this. Somebody said, according to my Thinkorswim trade ticket, selling 10 SPY calls for $1 requires over $50,000 in buying power. Does that sound correct? Of course it sounds correct. One of the keys to the ultimate trades is we're going to show you the right products to actually trade. And that's exactly what we do here. We show you the right products to trade, how to actually mitigate risk exposure. And it's important that you know, and I don't want to be too evasive on that question, but it's important you know, we're not going to tie you up in a lot of margin. All right. If you have more than $2,000 in your account, you can absolutely do this. So with that, and again, I know I've read off just a handful of names today. I've gone way over in time and I want to respect everybody's time. And if you guys have more questions, I will stay here and answer those questions for you. As I said, it takes about 5 to 7 minutes before I actually see your name appear in here. But I want to thank each and every one of you for tuning in today. And please, we'd love to see you in the chat room right now. I'll be back over in there in a moment. We have the after the close going on. So literally the market will close and we'll actually have a few of our instructors live thereafter. Go to theotrade.com/skew, enroll now, and I'll see you guys in the chat room here at TheoTrade. Thanks everybody for tuning in today. Have a wonderful afternoon. Bye-bye.